We'll do it live.
Okay. No.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.
Yeah.
Back to the Capital Mindset Show live, everybody. We are back in action, and we have a guest today with us on voice. Well, you're seeing it delayed. So what I'm going to do for you, Cole, because this is the remedy. This is how we have to fix it. So you are going to see pretty much, not me, sorry. Let me show you what they're going to see, because I think that's important, okay? So at any given time, you're going to hear my voice, and this is just in case. We're not seeing anything right now, okay? So everyone, we're kind of continuing off of the old stream that we were on with Chris, or Strongman Personal Finance, where we were discussing some of the things that happened today, such as we had Tattooed Chef earnings report, we had Palantir earnings report as well. We can talk about any of that stuff. We also talked about some ETFs and why overlapping is a sin, a cardinal sin that you can do. So let's see how all the questions are going. We don't want to skip anyone. You heard I was going to sell a course. I wonder from who. For 10K, yes, then that one's true. That one actually is true. Well, I had a course before I even had a course. What? Okay, Cole, give us the MOAS. Tell me what the MOAS is happening. Oh, Cole, now you can tell me about the MOAS. Cole's now on.
What?
You're on now. Go. Tell us about the MOAS. Well, now you're on.
Okay, guys. So as you probably, for those of y'all out of the loop, I know not everyone here is an accredited investor. Earlier today, GameStop was up 12.77% at its peak. Bed Bath & Beyond, which is owned like 11% by the GameStop chairman, was at its peak up 57% in one day. And it closed the day up 40%, but after hours it's up 16% for some reason. I don't know why it's up after hours.
All right, so help me out. What's the first stock that you want me to look at? So I showed the audience the visual.
Well, I mean, there's GameStop, Bed Bath & Beyond, and AMC.
So GameStop, so GME stock. We'll go with this one first. And let's pull this in here so everyone can see it. And I shall bring you guys to desktop. All right, hold on.
Maybe show the. You can also switch between like the 5-day chart just to show real quick.
I gotta switch this one into. Hold on, let me actually do this. I gotta switch this. All right, because on my wrong display. All right, this is the right display. All right, here we go. So you guys can see that. Zoom in a little bit. Okay, so this is GameStop. So GameStop is sitting at, let's say, 8.57%. And up on the day one.
Go to the 5-day.
5-day chart. Let's take a look at that.
So yeah, up,
wow,
21%.
All right, what's the other one? Bed Bath & Beyond. So BBBY.
Yeah, that was the one that went crazy today.
Okay, so this one is up 39%. And
17 after hours. Yeah.
Okay, wow. So this is absolutely ridiculous. So this one is the one that the chairman.
In 5 days.
5 days, it is up 100%. Right, because the 5-day chart, by the way, is the most important. So, yeah, that's the most important chart.
For comparison, can you pull up SPY real quick, just so we can show that Bed Bath & Beyond is beating the market?
Oh, yeah, right here. This is all you do. You just put it up. You check the 5-day, and so SPY is only up 0.97%. Or you could have been smart and put your money in Bed Bath & Beyond. You'd be up about 90% throughout that same time period.
Let's put some numbers to this. Let's say 5 days ago, you put $1 million into the S&P 500. Like Strongman recommends. You would have gained, less than $10,000. But if you had, could you help me with the math here? If you put $1 million in Bed Bath & Beyond, Fabio, what are we looking at? Like $2 billion?
Yeah, exactly. Something nuts like that.
Yeah.
So talking about, I don't know if you guys are probably all coming from the show with where we talked about Palantir, Tattooed Chef, their earnings reports there. So if you guys want us to go over some of that again, we can. But again, many of you probably already saw that. So Gil Rodriguez, you called Uber. Uber's, I think, been on fire recently. All right,
Yeah,
recently.
He said he also called Bed Bath & Beyond.
He also called Bed. Okay.
No, I'm not joking. It says, "Who remembers me saying I bought some under $5 for a short squeeze?"
Okay, Cole.
No, that's what he's typing.
Oh, he did?
Yeah.
You called Bed Bath & Beyond? Oh, okay. So, yeah, there you go. So I thought Cole was joking.
Yeah.
Okay, so I thought Cole was joking on that. All right, so I bought BBW over BBY because... Yeah. Yeah, there definitely. All right, so what's the point of moderators? Weak move, Tyson. Well, no, it's because so that way I don't have to monitor spam bots. All right, so Capital Minds, have you looked at DraftKings last week report earnings? They did beat expectations. Okay, but expectations beating is not like everything, guys. What if expectations?
Yeah, can you actually educate me, Fabio?
Well, I forgot what there is. Oh, DKNG. That's right.
I always just remember dicking. Yeah.
Yeah.
Fabio, legitimate question that you can educate me on. I'm sure some of the viewers. Every time there's earnings, the company, it says like expected EPS, expected revenue.
Mm-hmm.
Now they don't go survey every person in the world to get what do you expect?
Analyst expectations.
Yeah, so who puts that there?
Yeah, analyst expectations from analysts that are covering the stock. And then the firm can put out their own guidance. So there's guidance and then the expectations by the analysts. So you can kind of see maybe how accurate each one is. So maybe in some cases, management is really accurate in their guidance. In other cases, there are analysts who are very accurate in their estimations. And you can find
But
out.
is it like when it says expected EPS on Google, is that like an average of all the analysts?
That's an aggregation, yeah. So that's an aggregation of analysts. Like you can go probably analyst by analyst. In some companies, you might find that in one instance there's an analyst who's really been very accurate compared to the rest, and so you might just put higher weighting on their predictions. But that's like probably when you become very intimate with a stock, and then you notice that analyst is consistent. There are services that do grade analysts on their predictions, but yeah. So I'll buy and sell. You give me a foo as a treat. Gil's called this recession. So Julius is going to come back and finish the job. What are you guys talking about? So that's DraftKings. I mean, DraftKings earnings report, they reported last week. So let's kind of pull up what happened. So DKNG, and let's pull up the earnings call presentation. Let's kind of see this because I want to see what the sales pitch is. So this is the sales pitch for the company. I mean, it's not really a company I'm too excited about, guys. Just not going to lie, but we'll take a look at it because you guys asked. So 466. So, like, the thing is, I attempted to create a DraftKings account. It's not like they deny me. It's just like I saw, like, the things I had to do. I was like, it's not worth it to me. And it's not really an activity I like to participate in. So I'll just pass it over to Cole because he likes degenerate options. So maybe that translates well to this. So Cole, do you like gambling a lot? And if so, do you gamble a lot on this? And again, I know you do options.
I had to spend about 45 minutes in my office with somebody because he had like 20 overdraft fees from
DraftKings.
He kept sending money from his bank account to DraftKings.
Okay.
I'm like overdrafting his account. So yeah, I think a lot of these apps are borderline, maybe acceptable, but borderline morally wrong, I guess.
Okay. Yeah, because they prey on a certain behavior. Yeah.
Like it's nobody's ever like, oh well, I budgeted, my kids are fed and the house is paid, so now I'll put $5 on the sports game. That's not who their target audience is.
Literally look at this. Look how much the cost of revenue is.
So was that like promotions or?
So I think the promotions. Oh gosh, that.
Because they give you like get 50 free dollars when you.
I honestly forget if they include that in sales and marketing or if it's actually in the cost of the sale. Because depending on the nature, they might actually include it in the cost of the sale, and that would make more sense. But it could actually end up being in sales and marketing, and then the reason why this cost of revenue is high is because of the nature of how they recognize revenues. So if they recognize, for example, all bets made, and then those are the payouts. So, I mean, that's something I'd have to check. Because, yeah, it could be argued to be sales and marketing. I don't know.
What else would the cost of revenue be? What for?
So it's the cost of rendering the service, rendering the service of the product. Everything that is cost of rendering the service of the product that is recognized in revenue, you match it with its cost of revenue. So anything that goes into that, the actual direct cost, so direct labor costs, stuff like that.
Well, what if I put in a $5 bet and I win $1 million? Where would that be on?
Okay, so Echo's answered it for me because he's probably found it. So it does go. So the promotional stuff is going under marketing because that's what makes sense to me. But I was saying, there might have been some way in which it's related to like maybe the cost of the acquisition of the sale. Well, that's still marketing. Never mind. Yeah, no, but I was reaching there to be honest. All right, but what was your question, Cole? Sorry. I've been doing government accounting all day. My brain's still like.
If I bet $5 and I make $1 million, does that show up on this sheet somewhere?
See, I don't know. I can answer that with like Uber, but I haven't done a deep dive here enough. So, I mean, what, 466 million? So, quick way we could reference is like how many bets are going on. But let me see here. The amounts include amortization, because I don't really analyze gambling companies.
Yeah, it just seems weird because it's like people just give them money over the app and then they lose it.
Yeah, I would assume so that's actually registered here in cost, because the reason why the margins would be much higher if they were just a platform of transactions. Like Uber's margins are poor because they recognize the revenue as the full ride, and then the cost of revenue includes the payments that are done or given to the driver. So that's why the cost of revenues are so low, even though they're, quote unquote, people think of them as a software company, but they don't have the gross margins of a software company. They don't have gross margins anywhere near something close to like 70, 80%. Or in some cases, software companies have 90% gross margins. But yeah. All right, let's see what we got here. So Captain wants to do.
Oh.
Andrew Marshall, expenditures for government entities. So no, I'm actually just at the beginning. So I went through all of nonprofits today, and then I went through most, or at least a good portion of the beginning of government, and then after this I'm going to finish off government. So spend the rest of my night tonight just going into the rest of government. Sorry, Cole, what were you saying?
Oh well, if you were to look at DraftKings price to book value, is that telling you a buy or a?
Oh my gosh, no. Please don't do that to me. That was so cringe. But I know who you're referring to. All right, so, dude, I tried downloading Margin of Safety and downloaded the worst. Oh, my gosh. Where can I find the PDF? I think that's a joke. I mean, you can probably find it on the Internet Archive.
I remember my first time ever getting a computer. I destroyed it within like a month with viruses, and now that hasn't happened since then because you learn pretty quick what to download and what not to.
I wonder how. So Capital Mindset, thoughts on TTCF being used in Guantanamo Bay to force confessions? Well, yeah, I haven't had really much of the, I think I've had a bite, but I probably should go out and try the product. Why not? Just have fun with it. Dan Weston says that's so cruel. Wolf Squad says, just buy TTCF, that is no profit. Okay, yeah. Crimley saying, no, I'm serious. No, I think you can just go on the Internet Archive and you can find the book there for free. But yeah, just be careful, guys, then. Please don't download a virus by trying to get a book. It's a good book, but I was like 10 years. Okay, I'm far behind in the context there. But yeah, so that's pretty much with DraftKings, man. Oh, this is actually something. Average monthly unique payers. We have, let's see here. So MUP is the average number of unique paid users. Unique paid users, B2C products. Okay, well, that's obvious. We define MUPs by the number of unique payers per month who had a paid engagement, participated in real money engagement. Ones are the B2consumer products, DFS content, sport, casino, game across one or many. Okay. Let's see here. Average revenue per MUP. So it is rising. That's a positive. Let me see again how much they're expensing a lot. I mean, already over here, they're already negative in operations. Right there, just right off the bat, before we even go into product and technology, general administrative. So eventually the goal is maybe they become a household name. They don't have to do this as much, but, it's very competitive. So vested stock option. Didn't they buy Golden Nugget? I'm pretty sure they also bought Golden Nugget. So let me actually just make sure before I say something that's not true. So DraftKings buys Golden Nugget. Let me see who bought
Are
them.
you referring to the limited edition
Yeah, it was
McDonald's McNugget?
No, it was Golden Nugget. Okay, Mlada and BG, Fabio, thoughts on the current state of the Chinese economy? I mean, yeah, this is kind of echoing back into really old videos now because I haven't talked about China in a long time since the video. Well, I have talked about China a little bit. Kind of just popped in to say that the VIEs were pretty much drawn on sentiment, but I still kind of stick by the old promise. I forget what month I made that video. I think like back in January, where I promised not to make any more dedicated VIE or China videos until like if the stocks go back up, because I thought at that point my channel was becoming known for just ranting about VIEs, and I didn't want to be that. But yeah, my thoughts are not too positive. I've showed tons of macroeconomic charts over the many videos that have covered macroeconomics, different charts showing how, for example, let's say the velocity of money is not really where it should be for a growing economy. It shows that there's signs that are a bit problematic to say the least, but that's the general thesis. The general thesis that retail investors and even, frankly, institutional investors have on China is pretty positive in some cases, but yeah. So let's see here. What?
I like how Echoes is begging you to talk to him because he knows everything about this stock, but like we've been asking for him to come on and he won't. So.
Oh yeah, well, Echoes, you know how to reach out to Cole. Cole's basically the guy who handles this right now. So Chick-fil-A Chick-fil-A is crack. Yes, it is. I agree. I want them to go public more than anything. You're saying Popeyes is better? I beg to differ, my friend. So like Popeyes is good, but it's not that good. All right. I actually, when I had the chicken sandwiches, I gotta say, okay, he's tired. He wants to be in the chat instead. That's fine. So Chick-fil-A, I would rank them at the best. McDonald's chicken sandwich is pretty good, but not that good. So I'd probably rank. Oh my gosh, we need a tier list here.
In terms of chicken sandwiches, Popeyes is way better.
Popeyes is better than McDonald's. Yes.
No, I think better than Chick-fil-A.
No, you're wrong, sir. Absolutely wrong. That is so wrong.
Look, no, you can't talk. No, I get to overrule you on all
because
Popeyes-related things.
What are you talking about? You live in Louisiana. You're so biased. You literally can't comment on this. You're from the state that it's from. So.
Wait,
So already you've been deactivated. You can't comment on this any further. Chick-fil-A is better, and the chat seems to agree. We just have Echoes is the only one saying Popeyes, or I haven't seen anyone say Popeyes other than Echoes. So maybe I'm a little bit biased in my
literally every company in the entire world made a chicken sandwich because of Popeyes. McDonald's, Burger King, probably other things I'm not even remembering.
I refuse to believe that, so I'm going to change. If that's true, I'm changing history to then only equate the Chick-fil-A sandwich as being the chicken sandwich.
Raising Cane's was so good like 20 years ago. It's actually sad.
Okay. Popeyes by a mile. Get out of here, JP. You're Canadian. Your opinion is also muted on this front. Because Chick-fil-A
chicken sandwich, honestly,
JP, by the way,
compared to other McDonald's food, their chicken sandwich is pretty good.
I mean, Burger King should be the king of burgers.
Burger King is the worst at everything.
No, Burger King sucks. Okay, how are we entering? Okay, so basically, you guys are going to get me into a rant about restaurant brands. So I think it's RBI is the ticker.
I want to know if you agree with this. You mentioned you want Chick-fil-A to go public,
QSR,
right?
Same thing. Yeah, Chick-fil-A, yeah, but they're not.
I feel, and maybe this is just being overly cynical. I feel like if Chick-fil-A went public, within 10 years, the food would suck.
I'll tell you this. Give it a couple years, Popeyes is going to be trash. Okay? You see this? You see this? This company burns everything it touches.
Yeah.
Okay? Watch it. Watch it happen. You're seeing here. Yeah, JP knows. You're seeing it right here. Write it down.
Yeah, you can't make food corporate.
No, it's not about making food corporate. Food corporate can still be good food. It's just
No.
What do you mean no?
No, any good food once it becomes nationwide chain, it can't be as good.
All right. So let's see. I got a question. What time will you at me? By the way, my eyes pop to it because it highlights me in red, so it's easier for me. I need to know who today had the worst earnings report? Tattooed Chef, Upstart, Palantir, and NVAX. Okay, so I don't even know who is NVAX. What the heck is this?
Look, the moment you get the bigwig corporate guys in the kitchen, they don't know what they're talking about.
This guy sounds like a. Oh, Novax. I should have known them. Novax. Wow. Oh my. Wow. Novax.
Fabio, they literally go. Oh, guys, I figured out how we can save $2. Instead of chicken, let's use dog food. That's how every corporation ever.
That is not true.
Were you trying to show Novax on your screen, or were you just looking at something else?
No. I was just trying to see on the side. Novax is some biotech, but they're down about 30 visual learners here. They are down 33.64%. For some reason, this Google thing freaked out and doesn't show any data. No, you have data. I don't believe you. There you go. I was like, there's no way. All right, so
whoa, down 33%.
Yeah, that's what I'm saying. So it's down 33% in a single day, but it's a $4.47 billion biotech. I mean, I'm guessing it's biotech by the name. Yeah, biotech. There you go. So probably something going on. But there was also Take-Two Interactive. TTCF had pretty bad earnings report. We talked about that on Strongman's, but basically gross margins aren't where investors are expecting. They aren't actually projecting that gross margins are going to be that good. They actually revised it downward. We talked about this in the Discord. Some of you actually mentioned ad nauseum about this in the Discord, that they took a $40 million credit facility, extended it from 2023 to 2025. The same bank, so the same bank is lending that out. And if I were to find out or tell you the name of that bank, it is, let's see here, UMB Bank. So UMB Bank is a subsidiary of UMB Financial Corporation. So that credit facility is kind of a weary sign. They're down to about 20-something million in cash, down from 100-something million over a year ago, back when a certain YouTuber was making the argument that, of course, they have a ton of cash in the bank, they're not going to need to dilute or anything like that. I would actually have a little bit of a comments back and forth between, people who watch the Tattooed Chef videos saying that they're not going to dilute or anything like that, because I was making some assumptions about that. But it looks like that's going to be definitely the case, because I doubt that they're going to secure capital.
We have a question in chat. Echoes wants to know what Rick is.
Rick is actually a facility. I have 2 videos that are in the backlog. One of them is actually Rick, but it's kind of a joke video. But actually, when I took a look at Rick, I was actually quite surprised
in person.
with the business. Yeah, I went in person. I inspected the products, and I found them to be actually, well, it could be I could be referring to a variety of other different products. So they do sell alcohol. That is actually one thing they do sell a lot of. But they also do some adult entertainment facilities, such as, let's just say, strip clubs. So they own strip clubs, nightclubs, sports bars, and so you actually see the cash on cash return on some of these facilities that they do purchase. It's actually pretty good. So they've done a good job. There is some issues that management has gone through with disclosures of compensation in the past, but I think it didn't total out too much. It's probably more to do so with just amateur mistakes on disclosures, because the management team isn't really he's been seasoned through his experience at this company. So this is like his first go at it, so to speak, in this responsibility. So it wasn't that big of a deal. It wasn't something like where he was, lining his pockets tremendously, right? So, but yeah, so that's basically, let me actually show the stock then. I think they're reporting earnings tomorrow. So RCI Hospitalities, or Rick Hospitalities, they're up 5% today. They actually started paying a dividend not too long ago, returned capital to shareholders. You can see the performance. I believe it actually has outperformed the S&P 500 over, I think, at least a 5-year. But let me double check. So, okay, no. It has outperformed the well, no, you can't really do that. So let's just look at the 5-year. So it has outperformed.
You do VT Sachs?
Yeah, let's do that.
Although I guess I would still go back further. That would go back further than Rick.
Yeah, they have to be kind of at the same, because I can only go 5 years. 5 years or max, but max is actually, I shouldn't even done that in the first place, because it's a bad comparison. But 5 years over this time period, it has outperformed the S&P 500. And so just for a quick look, so it's up 144%, while the S&P 500 is up 69.31%. That's actually kind of ironic considering the company here. But yeah, there's not many companies that do this. There's, I think, one private company, and then there's this one. So that are big players, and there's not really much room for new ones to come in, because the market isn't that big in terms, because you have a lot. It's a very desegregated market, and you don't have many that come on sale, and it's Well, it's not very. So it's very desegregated, and it's not very crowded in terms of capital because a lot of firms will not want to invest in these kinds of places for a variety of reasons. So yeah, there's that, and it is kind of tough. So Canoe Health for wait, what? Canoe Health for the 6th stream. I ask, please. What is Canoe Health?
Canoe. Oh no, I guess it's not Cano Health.
Capital Mindset. Have you bought anything today? So that's a. Let me pull up your comment. Where's your comment? Oh, I didn't even answer this one. I'd say off the top of my head, probably NVAX had the worst one by. Well, no. Let me check UPST because I haven't checked them out yet. Upstart.
I think he's telling you to do CANO as the ticker symbol.
Oh, Canoe. We'll get to them. Okay, so. By price action, Novax, whatever the heck, did the worst. So did I buy anything today? I'm trying to find your comment so I can bring it up. But if I can't find it, I'll just answer it. So I didn't buy anything. I actually just sold a contract. So I actually just sometimes I'll share that in the Discord. But I sold some contracts on Unum. I wanted to do that last week. I didn't get to because I was so busy. But I ended up doing it this week. They expire in December. There's a video that will give out some more context on this. That's already been not pre-filmed, but like it was filmed last week. My intentions to do something with the Unum position, and then I did something today. So that video is now going to make more sense because you have that context. Of course, I'm saying it now, but in the video, of course, I don't mention this event today because it was filmed literally a week ago. Hope you got that makes sense. But yeah, it's a live video, you know.
Fabio, what would your reaction be to if you saw a video of me, Fuhat, and Echoes eating Popeye's sandwiches at a strip club?
I don't know.
That'd be a funny mental image, though.
Oh yeah, it would be a very funny mental image. I'm trying to find the where's. I mean, let me see this. Where did I put the Unum? Because I already did actually record it. Where did I shove it? Let me try not to. Trying to just find this. If I don't find it, it's whatever. But all right, whatever. Anyways, I was gonna show maybe the Unum action, but I can't find it. It's somewhere around here. My screen's way too cluttered now. It's impossible. Unless I do the search, but I even forgot what I named it. Yeah, it's whatever. It's whatever. I was trying to see by. I see the AGRD one. I don't know why that's not still here. All right, anyways, let's continue on with the questions. Okay, so let's see here. Do you think an emergency fund is essential? Okay, that's a good question. I mean, that's an interesting question from my perspective because of, of course, it's no secret my age.
Here he goes.
What? What about it?
No, continue.
What about? No, Cole. No, Cole, I insist. You take the stage now, buddy. Come on, don't make it an awkward silence, Cole. Come on. Here we go.
So the word is essential. Let's do Fabio's favorite thing. Let's just get a definition for that word.
Okay, fine.
Essential is absolutely necessary. Based off of that, no, because you can not have an emergency fund and live.
Yeah. We're going to do it this way. This is exactly how you should construct every single argument, and it won't be annoying at all. So, yes, by the definition of essential, according to your word, Cole is right. Is it absolutely necessary? But hold on, or extremely important.
Whoa.
So
wait, in between the word necessary and extremely, what is that, Fabio?
What?
What's that thing in between necessary and extremely on the first definition?
Let me just answer Echoes real quick. I will do that actually now. I actually wanted to do a crazy reaction series. But what were you saying, Cole? Sorry.
So you see the first definition where it says absolutely necessary, extremely important.
Yeah.
What's that thing in between necessary and extremely?
Nothing. I don't see anything. There's no division whatsoever. You tell me, Cole.
Look, this joke is going nowhere anyway. Okay, yeah. So the thing about an emergency fund is, let's say you have no emergency fund.
Yeah.
Now, this isn't guaranteed. In fact, it's not even likely, as in it's probably, less than 50%. But typically market recessions and people getting fired happen at the same time. So if you were to get fired from your job and you have no cash in the bank, you would need to sell some of your investments. But usually, when you get fired, the stock market is also down. So you're probably going to be selling stocks at a lower cost than what you bought them at, probably because you're, dollar cost averaging every paycheck. So, not having an emergency fund is a good way to, well, just solely from a math perspective, it's a good way to lose money. But also, we'll talk psychology. Somebody with, let's say 6 months, that's more than some people recommend. So you have 6 months of emergency fund, cash saved up for expenses. You're gonna sleep sound as a baby at night compared to someone who's like, oh, I've got $20, but all my money's, in the stock market. You're gonna sleep like a baby. So
I mean,
I would at a minimum, if you're just starting, I'd try to hit that $1,000 in the savings account. That's like the Dave Ramsey baby step, and then I would recommend having at least a month of expenses saved up.
yeah, I have an emergency fund. It depends on like your situation. Like, do you have a mortgage? Do you have a lot of liabilities? Do you have
kids?
I don't have kids, but I'm also thinking about, for example, creating accounts for my non-existent kids already, so that I can start, at least building the habit now of also saving for them, because I know eventually they're going to exist, and I want them to have, a good time. Cole, don't make a joke, please, about that. I just realized I walked into something there, but yeah, what?
Nothing.
Yeah, don't worry about it. All right, so yeah, I think for me personally, I do like the safety or the soundness or peace of mind of having an emergency fund, and so that just knowing that my expenses can be covered for a certain period of time. I think right now my expenses are covered for a pretty good amount of time. I won't really, it's privacy, but like I do have one. It's what I want to say, and so I don't think it's like you will die if you don't have one, but I think Cole is right. The explanation from Cole's standpoint is absolutely correct. It's like there's other values to it that we can attribute that aren't necessarily that quantifiable, such as how is your sleep at night? How do you wake up going, oh my God?
Let's just put some kind of number on it. Let's say let's say you have 3 months emergency fund saved up, and theoretically, let's say you never have any cash flow issues, so you don't even need it. It's probably not going to be a big deal. Like maybe we could say, oh, if you invested it, you'd earn. I'm just going to throw a random number. Let's say you could earn $2,000 or something. On the stock market. Well, if somebody came to you and said, hey, would you pay $2,000 to be money stress free and like much happier? Yeah, I think most people would take that bet.
And then you asked a follow-up question, then we're going to get into some of the reaction stuff, unless someone else has any other kinds of questions like that. But this is very personal. So this entirely depends on your situation and your personality type. Obviously, if you can afford more, that's always going to be better, right? So like if you're making stupid amounts of money and your expenses are stupidly low in comparison, it would be very easy for you to, like, can your retirement afford it is like the question you'd have to ask yourself, because you have to, there's some balancing act.
Opportunity cost at some point.
Yeah. There's a balancing act at some point. So like, let's say you're an outlier and you're making millions of dollars a year and you spend as if you generate 40,000 a year. So that person can very easily afford to have an emergency fund that can cover years worth of expenses. And so like, cause they're spending as if they made 40K, but they're making millions, right? I'm just giving you an extreme example to kind of highlight this point. So it really does depend, because you can go crazy or nuts with it. And you at some point, as Cole said, can hit some sort of, where it's not an opportunity cost where you are dinging yourself. But obviously the correct answer is like the better that you can afford it without taking that ding where it's negligible, the better, right? Obviously. So, if you had like 7 or your whole life covered in savings, but you had enough money to invest where you're stupidly good, right? That's great, right?
I mean, there's so many variables, because one is, you have a spouse that's working.
Exactly.
And because assuming y'all don't work at the same place, it's unlikely y'all both get fired. But then also, if you have kids, well, you also don't want like a month mean, you could, but you probably want, if you have kids, you want to make sure they're protected. But just to give you all an average from people that are not the people making millions of dollars a year, but kind of middle class people. I've at the lowest, I've heard a month emergency fund. At the highest, this is super rare. I've heard some people have 2 years, but I'd say between 1 to 6 months is the average person.
Based on our current spending habits, I think my wife and I are close to that. Because we really don't spend much. We really don't.
Besides Teslas.
Well, yeah. But that's separate. So like no, just like on like leisure expenses, stuff like that. Yeah, we really don't spend much.
I think the last thing we need to touch on is what is like a month's worth of expenses.
Yeah. Yeah.
Typically, people mean like I typically hear it as necessities. So like, let's say, just throw something out there. Mm-hmm. If you have like a $100 a month like spa thing you go to, you wouldn't include that as a monthly expense. If you got fired, you'd obviously drop that.
Or if your job includes stuff like that.
Yeah, if your job includes stuff.
Yeah, no, because there's jobs that do. So there's jobs that have a nice stipends, I'll tell you that. So I'd say, yeah, all necessities is that's like your baseline, right? Your housing, your food, energy, all the stuff you need. That's your baseline. You need
stuff you can't cut.
Exactly. Yeah, exactly. Essentials. What are your essentials? That's your baseline. So shake my head or SMH. I don't know what it stands for, but I always think of it shake my head. Or so much hate, maybe. Do you ever look at penny stocks or stocks with really low market caps? Yeah, all the time. I don't buy them all the time, but yeah, I have a couple. I just don't like to talk about them too much. I'll talk about them if they're explicitly asked about in these live streams, but that's for now. Or if I need, not if I need to pump, but no, that's for now. Because if it comes a time where these live streams are bigger, I will refrain from even talking about them here. But like, just, I don't know yet. Maybe it really does depend, because I do want to be, cautious and careful about that. But yeah, the answer is yes. I don't negate any company just because of its size or anything like that. And Cole's thinking about a joke, maybe about size doesn't matter or something like that. But
well, that's what I try to tell myself.
So I have a video on this, Ricky, by the way, just to let you know. Okay, so just looking through this, and then we'll react to this video. Bro, got 2 kids, divorced, better girl I'm dating. Bare minimum is $1,600 a month to cover mortgage, food, and water. Yeah, I know. So then that's basically what your baseline is in terms of bare minimum. Kids are expensive. I don't have kids yet, so I'm at a big advantage there.
That's what Casey Anthony thought.
Oh my gosh. Okay. So pre-rev company? No, I've never invested in a pre-rev company as a legit investment. I'll tell you that, because I had invested in one pre-rev company for the lulz, and it made money. So, but yeah, and I've talked about that in one live stream when we talked about my degenerate trades in the past. Taking advantage of the liquidity.
Let's say you were trying to legitimately invest in a pre-revenue company. I mean, what would you look at, Fabio?
No, I literally was looking at how much hype was going behind it, but before like retail really, it was like legitimately degenerate gambling. One of them.
Is there any number you could even look at?
Well, one of them was before Kevin started pumping it. What do you mean number? Sorry. I know these were.
Let's say I come to you with 2 different pre-revenue companies. How would you decide which one's better? What would you look at?
So these were actually based off of like retail psychology, if I'm being honest, because it had nothing to do with the numbers. I couldn't care less, actually. I just thought at the time, and my different friends participated in me with each one. But there were 2 that come to my mind. There was a similar theme between 2 of them. I'll just tell you, they had to do with cars. So you guys can have a guess on which one. But because this live stream's not about those. So, yeah. Someone asked an interesting question. I'm going to answer some of these. The last question, though, I'm going to do a reaction to this video because it has been asked for me to do so.
It's a question I just quickly wanted to touch on. I mean, you can do yours first.
No, you can ask yours.
Oh, no, it wasn't. No, somebody in chat said, he asked both of us, do you follow the 50-30-20 rule, which is it's like half your income, 50% you spend on your needs, 30% you spend on your wants, and then you save or invest 20%. That's I'm sure that's a good rule of thumb. You
Yeah.
know, like if somebody's like, where do I start? But I don't want to, like me. I don't like if somebody naturally wants to spend like 10%
Yeah.
on wants instead of 30%. They shouldn't like up their spending just because like, oh, that's the rule. So you can personalize it. You don't feel like you oh, I'm not, I can't save more than 20% because that's a rule or anything like that. But it's a good starting point.
Yeah, I agree with everything you said there. Like, because it shouldn't make that definitive rule. If you start making a ton more money, do you really want to just increase your spending by the same degree? No, maybe increase your ability to spend and invest, right? And then maybe maybe increase your expenses less than what your income grows by, and you're going to thank yourself later.
You worded that way better than me. Let's say you're making 50,000 a year, and then so you get some job opportunity.
We're turning into
Next
Ross
year you're
Gerber here.
Yeah. You're making 50,000 a year. Next year you're making 200,000.
Yeah.
That going off the 50-30-20 rule, that means the 30% you spend on your wants, that would quadruple because your pay quadruple. But you don't suddenly need to spend 4 times more on non-essentials.
Exactly. Yeah, I agree with that entirely. We have a question here from TJ Bellwether. So TJ, I'd have to ask. So what are you studying? I'm actually curious. So you say, Fabio, can you do videos on how to get a good career? I'm 20 years old and in college, and I can't find job. There's tons of jobs beyond 45K. There's absolutely tons of jobs. You just gotta point yourself in that direction. And some of it is, of course, okay, what do you do while you're at the university that can differentiate yourself? Because, you have to consider that there's a bunch of young people like you, and they're all pursuing those jobs if they're so like, if you're not going into certain fields, okay, that are already very, like, okay, I have to ask, like, what are you studying? I have to start from there. But 45K for starting in some industries isn't bad, because let's say that continues off to something else. So I'll say there's someone I know that started off in a field that actually I think their first salary was 45K, and now they're making I think anywhere around 140, 150,000 a year, and they've been in this career path for about what is it, like 5-ish years. They did jump from company to company, and then they eventually specialized in a particular field. But I'm trying to be careful, because I don't want, this person does watch the stream sometimes, and I don't want to feel like I'm kind of ousting them. So that'd be more of a private thing that we can talk about. I'm studying marketing with a minor in finance. So I'd say that with marketing, it's going to be a bit more difficult, just being blunt. So even finance can be a bit difficult. But a little bit better in terms of, it depends, because there's some marketing jobs that pay really fat. And then, so what programs at your university are you taking advantage of to get to know the industry players? So take advantage of all the resources that you have at hand. I stress this every time we get into this rant. Go to your university and use all the resources that are available. Always, every time, people squander them, even in like high school. So back in my university days, I had a tutoring business that I helped out college kids and high school kids. The high school kids was mainly, the focus was more obvious, like we were going to get them into college. And I worked with an affluent community, so anyways, that doesn't matter. But the point is trying to get them into some universities or various other universities. There are some resources that they have at hand at their specific high school that they should take advantage of, that they really don't most of the time. And at university, I think it's even more egregious, if you ask me. So every university has really good resources to some extent. Like it's seldom you can tell me that a university has terrible resources. I mean, they probably exist, but usually they have really good networks within their vicinity. So Capital Minds, have you paid off all your tuition? I never had. Have you paid off all your tuition? What do you mean by like student? I don't have any student loan debt. I had zero. I went to school for free. So yeah, that's actually another strategy. So like when it came to you guys can see where I went to high school and university. It's on my LinkedIn. But when I went to the option to go to university, I had several options in front of me. I chose the one that was kind of the closest within my area. At the end, because I knew a lot of people within this, I had familiarity. I could have gone to more of my legacy school, one that a bunch of my family members have gone in the past. I chose not to, because in that one, I would have actually taken on student loan debt. And the university is in Chicago. And my uncle was actually offering me room and board. So I actually wouldn't have paid for room and board. I just would have paid for tuition costs. And they lived not too far away from the university, but decently close. So anyways, with that story, what I'm basically saying is I made a decision at the time to instead go to university that all my tuition was paid for. And in fact, I could get paid to go there with an additional scholarship. Because I talked about this in Strongman's live stream, check your own state for resources if you're young or if you have a child, that if they have stuff like, for example, in Florida, we have Bright Futures program. And every state has different necessities that you have to comply with. So Florida, you have to live in there in a certain period of time. And then you have to meet the requirements. So GPA requirements, volunteering requirements. Some programs, like, for example, the IB diploma, automatically qualify you if you pass the IB diploma to get the max level Bright Futures, which covers everything for your university. And so any additional scholarship is just money in your pocket, which is pretty nice. And also check out your resources. Again, this is for people who have kids, or if you're young and you're somehow watching this video right now, check out your local area for something called dual enrollment to take university classes even in high school. Can be rigorous. So be honest with yourself that if you can handle it, because if you do poorly in those, they can actually harm you. So it's a double-edged sword, but if you do really well, you can do really well. So in 10th grade, you can apply to get into the community college of your local area if they have this dual enrollment program. And of course, different states, different rules maybe. But in your junior year, you can apply to get into the state college. And so that one's going to be more impressive, right? If you're doing dual enrollment classes there, and then you get in as a transfer student. You don't have to do this. It's not, the only way of doing it, but I'm just letting you know, just be aware of that. So, as far as this question goes, I'd say that there are plenty of opportunities. Just don't squander your resources at university. I can't tell you that there would be events that universities would host, and just like you'd have, I don't know, let's say the partner of a firm, talking, and it's a consultancy firm, and at the end, all the people just want like the sign-in sheet for bonus points or whatever. Maybe a class is giving it out, and then everyone just like leaves, and then sometimes it be you and the guy, or you and the gal, whoever it is, and you can have a one-on-one, and that's like ridiculous, right? So, talk to people. Don't be afraid. And also think of it like this. They're looking for new people. So they already know you're just some guy with or gal with no experience. Don't worry about that. They already know that. So then just show them that you're like interested and you're kind of like cool to talk to. You should be fine. And then do that as many times as possible and break that ice more and more. All right. So anyways, that's that little rant.
Yes, we are going to live react to both Mo and Jeremy's new tattooed chef video.
What? No, please. They don't have a new tattooed chef video.
That's what Chad just said. Chad says Jeremy just uploaded a tattooed chef video.
Oh, gosh. Okay. Oh, my brain's
not everything money, Jeremy.
Well, I was going to react to the Everything Money Paramount
we'll do
video.
Everything Money first.
Oh.
And just real quick, this isn't universal. It depends on your plan. Just a quick flow chart for retirement accounts. You want, first thing, get your employer match on your 401k. It's always first. Then, if you have an HSA, which requires having a high deductible health plan, do your HSA after. Then max out your IRA, and then once that's done, then you go back and max your 401k.
Yeah, I agree.
HSA,
I kind of agree. Wait, I blanked out on the last part, so I don't know what you said. I don't know if I agree, but
you get your employer match on your 401k, then HSA, then IRA, then you go back and max out the 401k after that.
Yeah, for me, I mean, like I have right now the lowest version of the healthcare plan, but I'm maxing out the HSA, and I have, of course, everyone's situation is gonna be different because I'm focusing on, of course, maintaining myself. Everyone says that, maintain myself healthy, and then the way I kind of figured out is that the deductible is already the amount of basically a full contribution to the HSA in a given year. So I just had to remain healthy and nothing bad happened for at least 1 year, and then every year after that I maintain or don't have any emergencies, I'm going to be fine. And so I have that HSA program because the HSA is beneficial in both directions. So it's tax deferred and tax deductible. And then if I think it's 65 years old, then you can use it in your expenses.
Yeah. Once you hit 65, it's like a traditional.
We are really turning into Rob Burger. This is fantastic. But anyways, the reason
you do the HSA before the IRA, well, there's two reasons. One, the HSA is the only retirement account that you don't pay FICA taxes on the contributions. And then secondly, yeah, if you do use it for medical expenses, then it's actually a traditional and a Roth in one. You get the contribution you get the tax deduction on the contribution, and you don't pay taxes on the withdrawal if it's for a qualified medical expense, which you do not have to pay. You do not have to pay it at the time you get the medical. You can get surgery at 20 years old, save the receipt, and then 100 years later, when you're 120 years old, you can take it out of your HSA tax free, and just make sure you keep the receipt to show the IRS.
Yeah. I'd also say the other thing is, so someone asked, Mladen BG said, or Mladen BG comes up with another question. So do you invest in stocks, index funds through a 401k and IRA, right? So do I or you could, yes, you could. Absolutely. Depending, well, every country, because, Capital Minds has a global community, so every country is going to be a bit different. But yeah, for the most part, if we're sticking to the United States, yes, you can. And different 401ks will be of varying qualities. So Julius Caesar just made out another comment, an additional comment to add some flavor to this. I'm pumped. My previous job's 401ks were poo-poo. Basically what he's saying with that is, or he's highlighting, is that they can vary in quality, varying in optionality for you as the employee. And yeah, so just think on that. And also consider the fact that if you're getting stock-based compensation, that exposure it's having to your portfolio. So for example, kind of a general rule of thumb, if you're getting a lot of stock-based compensation from the stock or company you work at, maybe, just maybe, you don't want to add on to that by buying that stock. Maybe you do, I don't know, but like, there's maybe, just maybe you don't. Okay, but anyways, we kind of got carried away with that. So first things first, we are going to react to this video, and I'm going to make it full. Actually, let's not make it full screen. Let's make it in theater mode. Where is it? No, default. Okay, I guess it defaults to theater for me.
Why not full screen?
No, because I don't have the screen's not perfectly aligned, but we'll see. So let me unselect this. Yeah, you see, like it's not perfectly, but it should be fine. Okay, so this is the video, and I'm just gonna see. All right, no one has any questions. I don't want to skip anyone. I feel bad every time I do that, but.
And we're gonna see what we should pay for this company,
Oh,
and then
wait, I apologize. I don't have it on the highest quality setting, and you guys are gonna like see it all grainy.
And while he fixes that, somebody asked Roth
Paramount.
Additional.
Okay.
A lot of people overhype Roth. When it comes to 401k, if you're making $100,000 a year, and this is personal.
We're getting
but
into
let's say you only plan to take out, $50,000 a year in retirement. Well, the standard deduction for a married couple is like $26,000. So you're really not saving much money on, assuming you're living frugally in retirement. You're not saving that much with the Roth. So look at your specific example and talk to a tax professional. But the traditional 401k for a lot of people, especially high earners, can come out better than the Roth.
Yes. And one quick thing before we begin, Dan Weston is
you take the tax savings from the deduction and invest that into a taxable account. Assuming that.
Yeah. So Dan Weston is absolutely right with this. So, you can actually do really well if you also pursue internships. Like as soon as you can. There's actually a subscriber in the Discord who we were having a conversation very late. I think at like 4 a.m. We're having a voice conversation. It was us and a couple other guys. And the person's a young boy at a young boy. He's not much younger than me, but it's kind of weird to say it. So, but he's starting out in university. And so he's already like, he's wired for it. He's clearly like saying, I'm going to get internships now. And he's already got like the fire. So yeah, definitely pursue that if you can, as many opportunities as you can. Don't squander them, right? Your summers, maybe don't do classes, maybe do in some internships. Try your best and keep going at it. And all that experience adds to your resume. Maybe you find the one, so to speak, and you're like, that's where I want to work, right? You never know. And then you're going to get paid. You can get paid pretty well. Try to keep your expenses low, and you can have some savings there. Maybe you can use that to pay off some debts that you may have accumulated early. I don't know. So yes. All right. So
I'm going to hit Paramount, and we're going to see what we should pay for this company. And then for you traders, I'm going to go into trading, and we'll look at how to trade this thing. So this company, I read through their press release from the second quarter. This company is absolutely flossing. They are gaining U.S. users. They are gaining international users on their Paramount Plus. The stock price, this was at $120 a share.
Wait. The way you laughed sounded like a soundboard thing. Just like I pressed the soundboard. No, that was cool, guys.
I was trying to talk to somebody about taxable accounts, and then that just happens.
Just what happened? Sorry?
Rewind it.
What happened? Did you say something about tax?
Paramount. I'm going to hit Paramount, and we're going to see what we should pay for this company. And then for you traders, I'm going to go into trading, and we'll look at how to trade this thing. So this company, I read through their press release from the second quarter. This company is absolutely flossing. They are gaining U.S. users.
Is that what you're laughing at?
From the channel.
What?
Unsubscribe from this channel.
I don't think I'm subscribed. Yeah, I'm not subscribed.
No, I'm telling the viewers.
Oh, okay. Well, real quick before we continue. So, I will be joining their group, so I'm not going to be discussing anything in particular. I'm just going to strictly stick to this video, as per what I talked with Seth. Right, as a form of promise and keeping my word with Seth, I will join their group. I will see what it's all about. For anyone, thinks otherwise, that I'm not sticking to my word. I'm just not doing it right now because I'm really busy. I do not have time to spend any time on that platform or watch any videos. So, yeah, all the spare time is to you guys and to my wife, and that's about it. And eating sometimes. But anyways.
Take down that comment, by the way.
What? Oh, yeah, sorry, I apologize. I'm just going to click on you. Fabio, flossing is a dance. Oh, I'm not like
this stock is cranking 90s right now.
All right, so join the experience. Okay, so ready? Let's continue. So
they are gaining international users on their Paramount Plus. The stock price, this was at $120 a share, and that was not that long ago that we were sitting at $120 a share. That was just in let's see, March.
Okay, well, they're pointing out the Archegos Capital blow up because that was not. Don't use that as like a comparison where it's going to go, by the way.
March of 2021. So this thing has
weird blip in the stock chart.
Oh, B. Ross. No, I'm not calling you a little boy. All right. So it's you. I'm not calling you a little boy. Don't make it weird, man. I'm saying you're younger than me, but we're not actually that far apart.
Wait. So I haven't watched this video yet, but what if he starts drawing like day trading signals on the chart? And it turns into a kid flossing.
Oh,
has been hit and hit hard. So let's take a look here at the income statement before we get into anything. Let's see this revenue growth. And it grew. It was growing. And then we had this big jump. I'm wondering if something happened here, if there was some type of acquisition that went down, because to go from 13, 12, 26, that's what I'm wondering. And then honestly, the growth hasn't been great as far as revenue goes, but let's see what happens. Let's see their net income. Let's see if they have been making any more money. They have. It's been rather inconsistent. 3 billion, 4.9, okay. 2 billion, 2.8. So they've kind of been all over the map. Shares outstanding. This is kind of where I'm wondering, was there an acquisition made? Because they
deposit.
Well, this is why I do indexing, because it's so much easier. But I feel like if I was making a video about like going over a stock, I would like find out why the revenue went up so much. Like it seems like you could just Google that kind of quick.
Yeah, if you were buying an individual company, but yeah. I mean, their argument would be that they're just showing you the beginning of it and stuff like that. But let's not play around. I know where it gets pretty egregious.
Okay.
So
they were buying back shares, and then a big spike. So let's go to mergers and acquisitions and double check here. And what year did that happen in? That happened in 2018, 2019. Cash flow statement. Guys, I'm looking in here and seeing if there was any acquisition. I'm not seeing anything. So for me, if I were interested in this company, this is something that I would go and look further into. I would want to say, okay, what was that massive jump in shares? Something happened here. No company, well, at least I don't think, is just going to double their amount of shares on you in one.
Do you know what merger it was, Cole?
Looks like Viacom, according to the comments.
Well, it was, yeah, CVS and Viacom.
Year. That to me is something happened there. So I think that you need to go and do more research there. Let's look at total current assets of 15.
This takes a Google search.
15.3.
He has tabs up there.
5 billion. Total current liabilities of 9.72. What's their total long-term liabilities? 25.16 billion. Okay, so they're not in the worst position, not in the best position. Now the return on invested capital, that is
whatever
report. So look at these numbers. Total global subscribers, nearly 64 million, which also includes the removal of 3.9 million Russian subscribers because everything that's going on over there. They added the 4.9 million. And
interesting, they brought up that in this one, but not in the McDonald's one.
And their revenue grew 120%. The Top Gun movie became the biggest Paramount movie ever, bigger than the Titanic, and that powered the 126% growth that they had, which was absolutely incredible. Going down further, 5.2 million subscribers in addition just to their platform. That's not Paramount Plus, which included the subtraction of the 3.9 million subscribers from Russia. Paramount Plus grew over 43 million, which reflects the addition of the 4.9. Incredible. Both international and domestic hours watched per household grew strong year over year. Guys, this company was, this is something else that's very important to me. TV media. CBS was the most watched broadcast network for the 20th consecutive time in the second quarter.
I think they did this because people were complaining about them not doing any due diligence.
Nickelodeon was the biggest kids network for the 20.
They did a merger.
Well, I know, but I think that's why they're doing this part. I'm pretty sure because I don't know. It just seems like they didn't do this before. Now they're doing it. I mean, good for them. It's like, but yeah.
Can you explain this one to me?
Yeah, go for it.
So seemingly, I'm not a lore expert, but seemingly the point of the Everything Money channel is Paul knows how to do long-term investing and Mo knows how to do short-term trading. Do I understand that?
Yes.
So why wouldn't Paul do this video?
But Paul's trying to see if he can take a step back more, maybe. So he can focus on his 8 or 9.
Does Mo know what he's talking about? Well, why not bring in another guy for that then? Why not bring in another long-term trader?
I don't know. I have no idea. I don't know. Yeah. It's interesting. I don't know. I don't have an answer, fortunately.
8th time in a row. So they're able to hold an audience. That's something that really sticks out to me and says, okay, you need to just keep paying attention to this. So the company now, let's run through it. Is this, for me, Ford was getting too cheap for me to ignore. Is this a company that's too cheap for me to ignore? Now, no matter what comes out of this stock analyzer tool, I'm telling you right now, it's not just an automatic go buy. There's things in here that I would need to look for going forward to make sure that this is something that I do maybe potentially want to buy. So let's put in some revenue growth numbers. The revenue is definitely growing. I don't think it's going to sustain that 74% number. So let's see here. Let's go with 5, 7, and 9 going forward. Profit margin, I think, will stay consistent around this 12 to 13 to 14 range. Free cash flow margin.
Their number one used number is that 12.5, by the way. It's on the.
I mean, that's what normal free cash flow margin is.
No. I'm saying because they put it on the. We'll see.
It's a little bit lacking. Let's go with 5, 6, and 7 down there. PE 14, 16, and 18.
That is the part. So I knew this from the beginning because I already saw this part because this was sent to me like in the morning. Again, I'm sticking only the criticisms to this video because as per the promise, I'm not gonna talk too much about the other stuff until I join that group or whatever. But this is the part that is weird, but we'll see it in a second.
I'm going to do the same thing for the price to free cash flow. Something is going on with their price to free cash flow. This is the exact same reason why I would want to go do more research. And I'm going to put in a 12.5% return. I do think that Paramount is going to be a company that's going to be around in 10 years. So I'm not terribly worried about getting an incredible market.
What'd you say?
Okay. So somebody said, look, I don't understand any of this stuff. I'm not a stock picker, but I hear in every single video they do, they always have the PE and the price to free cash flow is the same. Mm-hmm. Does that make sense to always have them the exact same?
No.
Okay.
Not necessarily.
Mm.
Yeah, not necessarily.
Is it a okay assumption for just to do or
depends on the company?
What would you have put in those boxes?
What would I put in those boxes?
Yeah.
Not these numbers. I'll explain in just a second. Just a second, because I'm getting to that, Cole.
Margin of safety. Now, here's the numbers. Guys, this screams something. This to me is saying, okay, what is going on here? Why is everything green down here? This instantly just tells me, go do more research. Not go buy, go do more research and understand exactly why these numbers are showing up green for me. Current price is $25, and I'm looking somewhere probably in the range of that $75, $65 range. So pay attention to this. Go figure out what those shares outstanding that dilution was from. See what the acquisition was, if there was one. For you traders, Paramount, look at this.
So that's literally where it ended. Okay, because I was trying to give him the benefit of the doubt, let him speak the full way.
What's the ticker symbol?
Para. So P-A-R-A. So he said, let's hear it from his own words.
I think I may have figured out the issue, Fabio.
What? What's the issue?
So I noticed that his low. So is that the 73.55? Is that like the buy price?
That's the buy price, yeah.
Okay, so I noticed that that's about 3 times bigger than the current price, and I noticed that his PE ratio is about 3 times the current PE ratio.
You got it, Cole.
I just googled the stock real quick, and I saw it has a PE of 5.
Yeah, you got it, Cole. So
basically, for those of you that aren't investors, I'm a master. He just said, "What if people paid 3 times more for it?"
he just made up. So he made up terminal multiples without actually conceiving what those terminal multiples will be. Plugged those in, threw it in there. Some random freaking discount rate. I guess he's implying some margin of safety in there, but not really any thought to the margin of safety in this case. But anyways, just sticking to this, yes, that's the problem. So he said in these words, I'm going to highlight it again here.
What is going on here? Why is everything green down here?
One more time.
He is saying, okay, what is going on here? Why is everything green down here? This instantly just tells me, go do more research.
All right. Do you see? What is everything going, like what's going on down here? So he doesn't understand why these are green. Cole, you found it. How long did it take you?
I asked you for the ticker symbol, and then about 2 seconds later, I figured it out.
You figured out why everything is green.
I do want to give credit. I do pay $600 a month for their Paul tier, so that's
okay.
That's why I figured it out so fast.
I'll finish off with reacting to this, and we'll react to Jeremy.
Everything green down here.
Let's finish the trading part.
Exactly why these numbers are shoved. Figure out for you traders.
All right, let's
Paramount. Look at this chart. Look at this epic chart. Just straight up and straight down, and in a matter of just a few months. So for me, this is actually a pretty good stock to throw a dog. What am I trying to say here? Tracker share.
It only went up
Sitting on the bottom, just going sideways, and you can see the stochastic is doing exactly the same thing. You can go and buy one share for $25. Worst case scenario, this company goes out of business, it never exists again, and the worst thing that happens to you is you lose $25. The best thing that happens to you is this thing starts to creep. It starts to just turn up very, very, very slowly, enters the sweet spot, and you're one of the first people to buy into this thing as the price just keeps going higher and higher. Now, why would you buy a tracker share instead of just putting it on your watch list?
Can you pause for like 5 seconds?
Go for it.
Did he just casually hand wave? Oh, worst case scenario is you lose all your money, and just kind of like wave past that.
Yeah, I don't know.
Worst case scenario, you lose $25.
I don't have an answer to that. I don't know if that's what he meant or there's some. I'm not gonna harp on that too much, but yeah, I guess so. That is what he said. That is what he said. Oh yeah, worst case scenario. Okay, well he said only buy one share, so let's be fair.
Yeah. So which means at most you're gonna make like $50 off of this.
Yeah, maybe.
Well, I don't know about you, but for me, I have about 50 stocks on my watch list, and I try to organize them every day. But if I want to find something and I don't want to miss it, a stock that can go for a really good run, I'll just go and buy one share. So I open up my brokerage account every day, and I just see that one share there, and I'll remember.
I'm laughing because Bob Smith says Fabio has a Netflix bias. I kind of do, but.
I want you to think about this for the end of the video. Right now, going through Mo's brain right now is, wow, this is a lot easier when I already knew what was going to happen on the chart.
At some point in the future. Now, from a swing trading perspective, it's probably a pretty boring stock to swing trade.
Oh, I know where they got that from. They got that from Canva.
Because look at this. You just do so many sweet spot reversals, sweet spot reversal, sweet spot reversal. And even when you do get a big run, you're tethered down by these moving averages right now.
Netflix.
Trend is looking pretty good, but you're running right into that 25-day moving average.
All right, so that's about it. All right, we're done with this. So yeah, that's my thoughts. That's my reaction on it. So he pay attention to your terminal multiples.
Real quick question from that, Fabio.
Yeah.
So I just put City stock into their 8 pillars, and I gave it a PE of 25.
Oh, you're
like
in it?
Apple. No.
Oh.
We're saying I put City stock in there. For the PE I used 25 because that's like around what Apple is, and it gave me like a $300 buy price.
Yeah, that would probably do it. Yeah, that would probably do it. You figured it out, Cole. So if someone's willing to pay your Citigroup shares or buy your Citigroup shares off of you for the same multiple they would Apple, yes. You got it.
I think, dude, I just realized actually that taught me that it's funny that we're going from Mo to Jeremy, because I was just thinking Tattooed Chef is a really good investment because, like, you know, what's the worst case scenario? You know, you lose $7.
Same logic, yeah. No, but we're being facetious there a little bit, but yeah, Fabio, how would you determine what multiple to use? Well, that's entirely dependent on the company. I mean, that one thing is what industry does it trade in? What are some of the qualitative perspectives versus it and some of its competitors within the same industry, for one, and for example, well, what are you expecting from this business? And then at the time of, you know, your terminal multiple, what do you think? You see, this is where it gets difficult. What do you think the market will? That's if you're using that approach, right? Are you still waiting to show or teach us how to create a DCM model like EMs in under 15 minutes? Yes. So I'm going to hold off on that at least until I'm done with the thing. Or maybe should I do it before? I have no idea. It's really not going to be that useful though, Maddie. Like I said, I've said this many times. There's probably, I'd say, about infinite ways to build one. And then some are objectively worse, some are objectively better. Some maybe you might have different opinions, but yeah. Price to spread, price to tangible book. What is that? What pumpkin value? All right, so we're going to take a look at this reaction. It is a 29-minute long video. Cole, have you already seen this video so I can skip through this?
And all I noticed Jeremy has the 5-day chart because he's too embarrassed to show the 1-day chart.
Okay, does anyone know like a timestamp, or do you guys really want 29 minutes of just end?
We'll skip around.
Yeah, okay, but I don't know if someone already knows where a good part is.
If somebody knows
yeah, just watch at 1 times speed. Okay, yeah, that's probably a good idea. Yeah. So one.
Oh, baby. It's earnings day. Tattooed Chef earnings are out. I listened to the conference call. I've looked over all the numbers. I've had time to digest the information, and I've had time to prep this video because this is going to be a beast of a video here, okay? We got to talk about what's going on with the chef, what is good, what is bad. Whenever I look over an earnings report for one of the companies I personally have stock in, right? Especially, a massive position like I have in the chef. I have to always look at these things objectively. I have to call the bad and the good, and kind of go through all this and kind of figure out, do I need to reevaluate? Do I need to buy the stock even heavier? Do I need to sell the stock? Do I need to buy less aggressively and all those sorts of things? And so, this is a beast of a video, guys. Hope you enjoy this. As always, we got a lot to get into in this video. Now, before we get into all the numbers, the conference call, the details, there's a lot of things that were announced that kind of
take the comment off the screen.
Oh, I apologize. I forget to do that.
On the DL that I think are very important here. Before we get into all that, we got to talk about the stock price of the chef and kind of the setup. Let's call it that. And the setup was very bad going into these earnings, okay? You don't usually want to see this. So basically, this is a 5-day chart of the chef. The stock is up 22% in the past 5 days, the past 5 trading days. You don't usually want to see that. And the reason being is if you have a stock that goes beast mode prior to earnings, usually you're kind of setting yourself up for failure. And unless a company comes...
No, not necessarily, but I get it.
Out in absolutely obliterate numbers, you're stuck in a situation where you're almost guaranteed to go.
Not necessarily all the time, Cole. It's not like 100%. Oh, but he said the word usually. I'm being picky. He said the word usually. He's right.
And I explained this with Palantir stock earlier today. On the flip side, if you have a stock that, let's say, is just selling off, let's say it's down 22% in the past 5 trading days, all that stock has to come out with is something not horrible and not disastrous, and the stock price goes up. And you see that many times when this frustrates a lot of people. This same exact phenomenon just happened in a stock, and this is one of the reasons Tattooed Chef stock is up 22% in the past 5 trading days. This just happened with Beyond Meat stock. So Beyond Meat, the stock had been just in a very bad place for quite a while, right? Hadn't been doing anything, just selling off. And basically, Beyond Meat came out with a horrible quarter, but the stock went up a ton. It went from like $30 to $40. And this is what happens in the stock market. If you come in and your stock price is already pricing.
Yep.
Are they notating something of importance? Or?
Who?
The blue circles. Are they like what are they circling?
One of them is an earnings report.
Okay.
in devastation, and you come in with something that's not devastation, you can actually see your stock price go up even if your earnings are bad. And it's an interesting phenomenon in the market. It frustrates a lot of people, but those setups are very important if you're thinking about where stock price goes, at least short term. A stock I worry about is Honest. So Honest is honestly going beast mode. In the past 5 trading days, the stock's up almost 19%. They have earnings come down on Friday. So I don't like the setup there. I really don't. Now, for me as a long-term investor, am I going to go sell my shares? No. I don't ever make a decision like that because I'm in this for the long term. I'm in this for the next several years. So if it goes down, it goes down. I'll likely buy more shares. But at the same time, I can't deny the fact that now they're putting themselves, because the stock price is setting up for a very difficult kind of earnings, and they have to come in with and tear it up as far as numbers go. They get everybody really excited in order for that stock price to continue going up. And it's a difficult thing, especially in this operating environment. Like if you've seen earnings this earnings season, we've got a lot of earnings that just are barely beats, not too exciting. Like if you saw big tech earnings, most of those companies barely beat numbers.
I want to see his comment here.
This was important. This came
is what
out.
I want.
And basically, this came out right basically at the same time the earnings call came out. So, as the earnings report came out, Tattoo Chef announces $40 million credit facility. Basically, the financial corporation, the credit facility was increased to $40 million from $25 million and has a 3-year term set to mature in September of 2025. The prior facility, also with UMB, was scheduled to mature in September of 2023. Tattoo Chef expects to use the credit facility for general corporate purposes, which may include funding of acquisitions, capital improvement projects, and internal growth initiatives. Quote, we are very pleased to extend our long-standing relationship with UMB and appreciate the continued support of our business and vision, said Sam Galletti, President and CEO of Tattoo Chef. This expanded and extended credit facility significantly enhances our liquidity and our runway and provides us with financial flexibility to execute our balanced and multi-pronged capital allocation strategy. I put this here, better to be safe than sorry.
Yeah.
In terms of either raising capital or just having capital around a credit facility like that, it's important, especially when you're a money-losing company.
What?
Is it better to be safe than sorry? Is he right?
I mean, sure. to have the credit facility open to them, sure, why not? But it's probably because it's not because they're not taking precautions, Cole. I don't think they're taking precautions.
Want to have things like this in place. You don't ever want to be in a situation where you're desperate and you don't have this set up ahead of time, essentially. Because if you have to wait till the last minute to do a credit facility or capital,
so let's see the setup.
We're in certain places. So you didn't have people expecting that margins are going to magically be in a great place this quarter, or cash flow is going to be at some crazy place this quarter. No one expected that going in. Okay, so the expectations were, as management kind of said. And I was thinking going into this earnings, I was thinking about like what the revenue numbers alone could have been if it wasn't for like all the outs we see all the time, right? This is from Target in Columbus, Ohio. I mean, look at this. This is just outs everywhere. Because the problem is that the chef, they get on store shelves and it sells ridiculously fast. They have pretty much the highest velocities you're going to find from a frozen food company out there. It's insane.
Oh, Discord.
I mean, it's just there's outs everywhere. Like the whole cooler is just like out, right? And other companies, they have plenty of product, but they don't sell the sort of velocities.
I mean, it's considered like, is this technical analysis or like qualitative analysis?
This is qualitative. This is kind of like what's it called? Like a social arbitrage trade.
So when Warren,
and the good news is
Buffett bought Apple like in 2016, he went to like the Apple store
and he saw how many people were in Apple, and he's like, "Yep,
Chef will be on store shelves in stores like Target and whatnot."
Did he post it on Discord?
What?
Did he post it on Discord when he went to the Apple store?
Yeah, he 100% did.
Okay.
Yeah,
okay.
He's also very vindictive,
man.
man. If you question Warren Buffett, he'll talk about you a lot.
Okay.
Will order a lot more product because they're like, oh my gosh, like our whole freezer door is gone, right? And with some of these other companies, you don't have to order that much because they don't move like that. Store here, I mean, look at the outs. It's outs everywhere because the product hits store shelves. This is from a Cape Coral future, so that's the only good news. The bad news is it obviously hurts numbers in the short term. Okay, so net revenue came in at 15.6% rise year over year. That is a miss. Analysts were expecting 64, so that's a bad thing there. And like literally, I think about.
So, no, I just love how he said that. He's like that. It was a miss. That's a bad thing there. I like
how before he got into actual numbers about how the company did, he's like, here are pictures from 3 different stores.
Thank you, Cole. I was about to get into that. So the weird part about having this, it wasn't really planned. So he's showing us the stores and saying, look how much they're selling. Look at how much they're selling. It's unbelievable. And then the very next thing, he shows a slide and he goes like, yeah, they missed expectations. So they did grow. We're not going to take that away from them. They grew. They grew about, let's round it up. They grew 16%. But this is a very far cry from the estimations of the growth that, I mean, even I think Jeremy was claiming back in older videos. If they're still up, you guys can probably remember them. So branded product net revenue. So keep in mind, the branded revenue, you can see there, it did grow by 58.4%, right? Total revenues, because like, look at that. Tattooed Chef branded product revenue increased to 33.9 million. So it's a very small base, and if you see their total, it's covering it.
All these store shelves being empty because the product just sells through, and I'm like, dude, I think
there it is. So about a little bit more than half is branded, right? Because the majority of their business is still, in terms of sales, well, probably I don't know how the profit breakdown really is, but I'd assume the margins are a bit higher, even though they're really bad on the branded stuff. Right. So the question then starts to come to mind, okay, they're selling 58.4%, but you can't pay bills based solely off of sales, right? You got to have, so I'm talking about operational expenses. You know, you have the cost of the product. What are the gross margins there? Whatever's remaining after that is what you have left to pay the other bills. Okay, so you see we have operating profit, or in this case, let's just say EBITDA of about 20.5 million and a net loss of 6.4 million. So additional cost probably like, I don't know what it was, interest expense or something like that. But
could have crushed numbers. Like literally, they could have crushed analyst numbers by just having the dang product in stock, in my personal opinion. Once again, that's not Chef's problem. That's retailers just not ordering enough and just not understanding, right? And their algorithms like, oh, this product moves because it's basing the volume off of what other frozen food products sell at. And it's like, these other ones just don't sell like the Chef sells, okay? Tattoo Chef branded product net revenue is up to 50.
what happened?
What did he just say? It was actually, he said something about, well, that's not the chef's problem, it's the algorithm. Like, but I didn't actually hear what he said. It was kind of fast.
What is it? Let me hear it again.
Other frozen food products sell at, and it's like these other ones just don't sell like the Chef sells, okay? Tattoo Chef branded product net revenue is up to 58.4%. That should continue to increase, and I mean, over time, that should even, in my opinion, because basically Chef has branded products, and then they have some non-branded products. That's their old historical business, let's just call it that.
Yeah, what were we going to say?
No, we didn't go back quite far enough, because he said something like, the reason
moves because it's basing the volume off of what other frozen food products sell at, and it's like these other ones just don't sell like the Chef sells, okay? Tattoo Chef branded products.
That one? Or even further?
No, it's still back, like,
just sells through, and I'm like, dude, I think they could have crushed numbers. Like literally, they could have crushed analyst numbers by just having the dang product in stock, in my personal opinion. Once again, that's not Chef's problem. That's retailers just not ordering enough and just not understanding, right? And their algorithms like, oh, this product moves because it's basing the volume off of what other frozen food products sell at, and it's like.
So Jeremy, if I'm understanding him right, Jeremy just said they would have beaten numbers
if retail,
but they were always out of stock because the algorithms look at all frozen foods, and since Chef sells more than other frozen foods, they couldn't stock properly.
Yeah, that's basically I think what he's kind of saying there. So that basically it's retailers' fault. It's not Tattooed Chef's fault. It's the retailer's fault in this instance. Yeah. I think that's what he's
from major grocery stores. They would never go, oh, this one stock is always empty.
These other ones just don't sell like the Chef sells, okay? Right, should even, this number's going to 90% plus over the next few years because that's where their focus is, okay? Net loss came in at a massive $26.4 million number. That is not something we want to see, but it's something we expected to see. Adjusted EBITDA came in at a loss of $20.5 million. So big bad numbers there. Order, you know, 1,000 square foot Tattoo Chef operated a cold storage facility that I know Stephanie said that could save them around $2 million roughly there, which I think is very important. They completed the first run of Tattoo Chef refrigerated plant-based oat butter bars at the Belmont facility, which is very key. We'll talk about that later in this video. They increased capacity and streamlined production process at the New Mexico Foods distributors facility. They completed construction of new in-house food, basically a safety laboratory in Paramount facility. Here's the deal, man. The Chef has so much going on because they did several acquisitions. They got new, elevated the Tattooed Chef brand, all while investing.
He still goes off on this one sheet a little bit.
So I feel like to further his point, anytime the local Target, like his closest one, anytime they get Tattooed Chef in, he goes in and just loads his cart and empties it. Then he like calls the manager and he's like, "Yeah, I went in and it was all gone."
Maybe he does. I have no idea. Oh my gosh. Maybe the pictures are after he raids it. He raids it first and takes a picture of it and then posts it. I don't know. Because I got to tell you, they're always fully stocked at my Target. At all the Targets I've been to in my area, they're always fully stocked. There's never.
Walmart, they're fully stocked and nobody's even bought one for a year.
There's the cobwebs. There's like a frozen cobweb.
there's like a skeleton like in the freezer.
there's like an ice spider or something.
Can you go ahead like 2 minutes? It looked like you had like some weird pictures of like people.
Oh yeah, that's where I was gonna go next because that intrigued me right here.
Yeah. And I don't know how many of you guys saw this, but if you follow Tattooed Chef,
weird people. It's the freaking Tattooed Chef. Cole goes, some weird people. He has a picture of some strange.
No, I said he had weird pictures of people, not pictures of weird people.
Oh, okay.
I just why is he going from earnings to like pictures of humans?
I don't know. Well, clearly it's this. So the Sarah Galletti and the chips.
Essentially, they were showing this off. They were basically sampling their products at, I think it was a big concert venue in Chicago, some festival I believe was in Chicago, and they were showing off the products and new tortilla chips. So I can't wait to get my hands on that. You know, we're gonna have to wait at least a few more months before we can get our hands on that. But you know, that's just a massive opportunity. And if they sell through anywhere close to the sell through they've had in the freezer category, oh my gosh, man! I mean, the money they're gonna make from that is just gonna be ridiculous. I'm extremely excited to try these as well. These oat butter bars. I mean, I think this is a pretty darn big opportunity for the company as well with these plant-based bars. I don't know if it's as big as necessarily the chip opportunity. I think that's a whole other growth.
So I'll say this legitimately is a better opportunity than frozen food.
Yeah.
No, I'm serious. Like legitimately.
No, I'm being serious too. That looks good. Yeah.
Yeah. It's legitimately a much better opportunity. So, yeah.
Now, I'll let you finish. Yeah.
No. That was pretty much it.
Oh, I was gonna say, I know the haters are gonna come in and say, but Cole, don't plant-based proteins and absorb into the body as well as whey-based proteins? Shut up.
Yes, soy boy.
Yeah.
Both opportunity there, but I think this is pretty darn exciting as well, and that's another new category they're launching into. Okay, so it's very, very exciting. Revenue increased 15.6%.
All right, give me
to 58.1 million in the second quarter from 50.3 million at the same time last year.
Cultural
price reflecting an approximate $6 million reduction in club sales year over year due to the timing of promotions in 2021 versus 2022. Excluding this impact,
You were saying, Cole?
I said the reason Tattooed Chef didn't beat earnings is because retail didn't order the bars in time.
Yeah. Probably why. I mean, okay, but no, in all seriousness, those are much better opportunities than what they're currently doing. What do you, I'm trying to see what he's highlighting here, what he finds is important. All right, so this is interesting. So what is he going to say here? All right, so he's highlighting the...
Now, look at this line item. So now we're looking at their balance sheet, okay? They've got $32 million in accounts receivable that's out there, okay? Pay up. Like, whoever owes the chef money, pay up, baby, okay? Pay up. We got to come see.
You nervous about them not paying up? I mean, they should be paying up.
1x speed. I'm going to be fair to him. Put in 1x speed and play that again.
Yeah, that's all I got to say about that, okay? That's a lot of money. 32 mil? Jeez. So basically, you know, what this means is you know...
Go back like 20 seconds. I just want to watch him say that again.
Because they have done so much in the front half of this year, and they've had so much working against this company in the front half of this year, it's ridiculous, okay? Now, look at this line item. So now we're looking at their balance sheet, okay? They've got $32 million in accounts receivable that's out there, okay? Pay up. Like, whoever owes the chef money, pay up, baby, okay?
I don't know if he knows what accounts receivable is now. No, because I don't know if he knows, like, how they're maybe scheduled, like, because depends on who it is. I don't know. It's not like they're taking it to collections. I don't know what he thinks it is. It's like Tattoo Chef's not going to a collections. What?
He's so manic about it. Like he sounded like it's been like 2 hours since his like last like meth hit, and he's like, come on, give it to me.
no, but like legitimately, like I don't know if he. So it's just due within the current period. That's all it means. And I want to see what he says about the property, plant, equipment. I'm actually genuinely curious what he has to say about that. So, Tattooed Chef, actually, Andrew Marshall, I got to bring up your comment because I didn't even see that yet, but they have apparently 30 million in accounts payable. So that's, that's very slow.
You know what the one interesting thing about Tattooed Chef's accounting that makes things a little more difficult?
Here, give it to me.
The property, plants, and equipment, the plant is just like an actual plant.
That's good. All right, so I really want to see what he says about that one because he has squared it off.
Well, we got to come see you. That's all I got to say about that, okay? That's a lot of money. 32 mil? Jeez.
The way he says it, it's like a street terminology. It's like, let me see.
$32 million in accounts receivable that's out there, okay? Pay up. Like, whoever owes the chef money, pay up, baby, okay? Pay up. Well, we got to come see you. That's all I got to say about
I just imagine Jeremy just showing up to your workplace with a bat, just like, where's my money, Brian? Where's my fucking money, Brian?
Did you see him wipe the sweat off his brow as he says it?
Okay, that's a lot of money. 32 mil? Jeez. So basically, what this means is right, if this was all to be paid out today, let's say, for instance, which is not happening, but let's say, all these retailers and distribution companies all paid the chef out today, the chef would have $32 million more in their bank account than they do, essentially. So that's a big number there.
Yeah,
okay? Property, plant, and equipment, they're up to almost $58 million.
What was that?
Well, he's like, yeah, if they got this $32 million in cash right now, they'd have 32 million more cash.
Yeah. I mean, yeah. He's not wrong, yeah. But like there's not really like they already have agreements with who they're selling to. So basically all that just means is that's owed to them. They've recognized the revenue because services have been rendered, and then that's money that's just owed to them within the period. So they've already given them.
Because I'm going to be too lazy to do it. Fabio, you actually might not be too lazy, but somebody in chat, one of the memers in chat, just take that audio from the last like 20 seconds and edit it onto some like mafia movie. We're like about to break some guy's kneecaps.
Trucco's already on it. I mean, I'll do it if he doesn't do it, but yeah. Yeah, Jeremy's in the Goodfellas, exactly. All right, he's about to highlight property, plant, equipment. All right, imagine being this worried about accounts receivable. Oh, wait, I got to remember to take off comments so that we don't get, but Andrew Marshall. Imagine being this worried about accounts receivable unless it's a widely large number, which this isn't. Yes, you want one that's really large, BioNTech. No one even looks at that. Yeah, exactly, I agree with that. It's not a story for this company at all. Yeah. Yes, he's absolutely right on that too. Okay, so let's see what he says here because I'm very curious.
In property, plant, and equipment now, which is obviously, there's a company that's going to grow into a $500 million revenue company and then $1 billion plus revenue company. When you're talking about those sorts of numbers, you better have, enough facilities to make that happen, right? And so that's very, very important there. Accounts payable came in at only about a little over $2 million increase there. So obviously accounts receivable is up much, much more than a little over $2 million. There's a, okay, property, the chef out today, the chef would have $32 million more in their bank account than they do, essentially. So that's a big number there, okay? Property, plant, and equipment, they're up to almost $58 million in property, plant, and equipment now, which is obviously, there's a company that's going to grow into a $500 million revenue company and then $1 billion plus revenue company. When you're talking about those sorts of numbers, you better have, enough facilities to make that happen, right? And so
those also don't necessarily, I mean, like, in this instance, like, yeah, they're making more investments into their infrastructure, so to speak. So, like, I know they did that, whatever facility, I forgot what it was, but they bought some facility. So, yeah, I get in the spirit of what he's trying to say.
Very, very
I'm not going to harp on that.
Accounts payable came in at only about a little over $2 million increase there. So obviously accounts receivable is up much, much more than a little over $2 million there, okay? Which I think is very, very important, right? Now, conference call wise, okay? So 7 core, very important pieces. Sam said he's very confident the company's getting to a path to profitability. By the end of 2023, he says he can see it. That's good news, okay? Number 2, they're doing low.
Yeah.
It's just at number 4, I read chip launch, and I was thinking wait, they're not like in the. I was thinking like AMD and Intel and stuff.
They're getting into the chips industry. They're coming out with a GPU, a vegan cheap GPU. Is this his? Yeah, these are his slide decks.
Yeah.
This man.
Well, he goes to Oh shit.
Paint?
Who are the people who invest in startups?
Hey, wait.
Yeah, he goes to venture capital firms and plays this.
Oh my gosh, that'd be funny as heck. No. Maybe he once saw my video or someone making fun of his like paint slides because he doesn't. I don't know if he does them anymore. Maybe he still does them anymore. It still bothers me that the corners on this logo here on the side, I'm kind of maybe blocking some. Well, I know you guys can see it. Like they don't align. So it's like he didn't do this.
It's not even a shape.
Yeah. He probably just did this and was like, yeah, I like it. It looks cool. It's good enough. It's like he makes a lot of money, and you'd think he can just hire someone to do that.
Also, wait, hold on. Here's another. Maybe
we're being
this
picky.
Is
We're being way picky. Uh-huh.
No, this might be asking too much editing from him. But instead of just having like a image of the logo up, why doesn't he just like add it onto the video afterwards?
That I don't know.
Have some giant border.
That I really don't know. Maybe maybe it's technologically challenged at that point, but yeah, I don't really know the answer to that. I mean, it goes to show you that kudos to him that he can generate. I mean, how many views did he get? Well, 4,295. Oh, that's nothing for him, but he put.
Well, it just came out like while we were streaming.
Okay, well, he put minimal effort into this, and he will generate an obscene amount of money on this video.
No, I legit, because I had never heard of this guy until Millennial Money. Because I've been watching Andre, Kevin, Graham, and then like I pull up this guy, and he's just going through different JPEGs he has pulled up, and I was like, wait, is this like satire? Like this can't be his channel.
Oh, look at this. Look at this. Life gets better. Bump, 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 bump. So these jokes have me laughing like Jeff Bezos. There you go. Yeah. Cole, you're doing it. All right, so he's a simple man. No, I think he's trying his, yeah. All right.
This is very key, okay? And this came out in the conference call. They're doing a low double-digit price increase very soon. Now, if you're wondering why didn't the chef already increase prices? We see all the other food and drink companies. Here's the deal, okay? And they said this in the conference call. That's why conference calls are very important to listen to. They just got in all these retailers, right? The last thing you want to do when you're just building a relationship is you get into retail and right away you're like, hey, we gotta jack up the price, right? If you're Coca-Cola, if you're Pepsi, if you're I don't know, Conagra Foods and Healthy Choice or whatever, right? You've got a relationship that's built for years and potentially decades. It's no problem for you to go up in price. But when you're a new guy on the block and you just get in the retailers and then you're like, oh yeah, we're going up in price. It's not the best look. So it's unfortunate timing for the chef. But now they're comfortable enough, and now they got the sell-through in these retailers, and the retailers realize, oh man, the chef's the real deal, Holyfield. They're moving crazy volumes here.
What? Wait.
So now the chef's in a
real deal, Holyfield.
Yeah, Tattooed Chef has pricing power now.
Sell-through in these retailers, and the retailers realize, oh man, the chef's the real deal, Holyfield.
Did you hear what he said? Real deal, Holyfield. Oh, okay, that's catchy.
Well, no, I mean that's a common. I mean, my friends say that.
I guess I don't live. Okay, that's not something we say.
I made that up.
Oh, okay. Okay. Well, no. There's some different parts of the country have different phrases.
Is he talking about Evander Holyfield?
No, real deal Holyfield bacon memes. So your question, real deal what? Real deal Holyfield.
But he's talking about the boxer?
I don't know. I don't know. I'm uncultured. So they have pricing. They have no pricing power. Yeah, I would agree. A lot of you have pointed this out in the Discord that they don't. They really don't. So yeah, real deal. Skeet on the streets. Okay. Yes, the boxer. So it is the boxer. I'm just uncultured.
What's it have to do with it? I mean, maybe that was the saying.
No, it's a common saying maybe. So I'm just uncultured. So we're just being way too picky there.
Moving crazy volumes here. So now the chef's in a place where they can do this they said low double-digit price increase. So rather than just do a slight increase and then a slight increase, they're doing a low double-digit price increase, which I think is very, very important. Every other food and drink company in the world is going up on price. Why shouldn't the chef, right? And so this is obviously going to help the chef's margins in a big, big way. It's hurt the chef's margins by not increasing price because everything for the chef's business model has gotten substantially more expensive, but they didn't go up on customers, okay? They're finally going to do it. That's going to make not only revenues look better, but that's going to make margins look much better for this company, right? Number 3, they got a new major distribution deal, they said on the call, coming soon. My guess is, they did not announce that. They said, at some point that news will come out and they'll release it. In my opinion, it's likely one of two companies. It's either Walmart, they're getting big distribution into Walmart because they have a very limited presence in Walmart right now, or my other thought is Kroger, okay? Walmart, they have a great relationship there because Sam's Club, and they move crazy volumes at Sam's Club when they're, really like pushing product into Sam's Club, okay? But Kroger, they have a few different SKUs in Kroger and they're selling through unbelievable, but, they're going to have 30, 40, 50 SKUs in Kroger stores, in my opinion, over the next few years. Right now, they've got, in many of these Kroger stores, like 3 to 6, maybe 8. So they got a lot of expansion there.
I still don't entirely understand why he's so focused. Because if I was looking at this company, because I want to be fair with it, I'm not going to be blindly hateful towards it. But the snack foods is what I would genuinely be the most excited about for a variety of reasons. It's far less expensive to store snack food items.
The margin has to be way higher.
The margin's going to be better. So you're fighting in a bad area. So they kind of entered this market, and so that's well and good. Oh, bump. So I got dollars for tuition. Oh, thank you, Kip Fleming, PhD. Well, you are a PhD, so maybe you don't have any student loans either, or tuition, or that part of your tuition. Don't pay me your tuition. But thank you so much for your super chat. So if you have a question, you can ask a question as well. So I feel like Fabio wants to pick his nose, but is constantly trying to hide it. How did you know, Trucco? How did you know? By the way, did you hear our call to action?
Yeah, I just looked up an article. It said biggest chip launches of this year is AMD Ryzen 7000 series and the number 2 Tattooed Chef.
Oh, wow. He's saying PhD in Christian counseling. However, I'm collecting this bread in mass. Like, oh, wow, that's a good joke. Oh.
Funny. That is funny.
That is funny. All right.
Hold on. No, I feel like I'm still missing layers because I got the mass joke, but then I realized the bread, like money, but also like the body of Christ. It keeps every time I reread it, there's a new layer.
No, I know. It's insane. So let's just keep this comment up so everyone can just read it, so they don't have to scroll up. It's just here on the screen. So you can keep reading this comment because I'll cover me because I'm not as important as this comment.
Yeah.
All right. I'll let it keep going. You just hear my voice, but just read this comment.
In my opinion, it's likely one of those two. Who knows? Maybe it's somebody else. But yeah, they talked about it's a new major deal, so I'm thinking it's one of those two guys. Okay. They also said they got the chip launch coming at the end of 2022, beginning of 23. Like I said, that's going to be beautiful margins. Like chips. You want to talk about one of the most profitable food-related items you can sell chips, okay? There's a reason Pepsi bought Frito-Lay a long time ago. That's all.
Oh, he's not wrong on that. That's the funny part. He's not wrong on that. So the only thing is the price that you paid and then the probabilities that they succeed. That's very important. But he's not wrong.
Actually,
on
that. I just bought a chip index. Just any company that sells chips.
Chips. You see, PepsiCo is the top dog. PepsiCo is by far and away the top dog in that, right? Because they do own Frito-Lay. He's right about that too. So, give him his right. All right. So, I love that one. Fabio picking his nose behind the comment. Wait, let me move this back because now But everyone got a chance to read that joke. That joke was phenomenal. Many, many layers. All right.
A money maker, man, and I mean a big money maker. Number 5, butter bars are coming at the end of 2022, beginning of 23. That's exciting. I think that's huge, man. I think that's really big. I don't think it's as big as a chip launch, but I think it's just another touch point in stores that get people interested and then go try other items that the chef has, right? Then, like I said, the chef has a vision to become a food giant. And that's exactly what I envision this company's going to become over time. Okay. They also have margin and gross profit margin expansion expected as this year goes throughout, and free cash flow to a much healthier place over the coming quarters as well. Okay. So overall, I look at all this, right? And it's kind of what I expected. This is, in my opinion, the bottom when it comes to the chef's business model and just being in a tough place. And it only gets better from here. We're going to see not only revenue go up quite substantially and likely reaccelerate now quarter over quarter, but we're also going to see margins improve quarter after quarter. We're going to see free cash flow improve. We're going to see the bottom line improve. Okay. Now, if we don't see that over the next several quarters, I'm going to be very worried. Okay. That would cause me to pause a little bit. But as long as we see this play out, and I'm confident that's going to play out,
Well, I mean, he's in a situation where that has to play out because he didn't invest, like, let's say, for argument's sake, now, where now it's a totally different value proposition objectively. It might not even be the best. It's not the best value they could get, but it is a totally different value proposition buying today at, what is it, like $7, or when it was $6 even, than when I think he was buying it above 20 at the teens.
I think 25 was the highest.
Yeah, that whole area it's a whole different ballgame. So the risk involved where he was buying versus where you'd be buying if you were buying today is vastly different. So he's not wrong on any of that. And as many of you are actually pointing out, again, like it's all about the execution, because yes, it's true that the chips and snacks could be better than frozen foods. Yes, that can be the case. The question then stems, will they succeed? Yes or no? What do you think the probability of that happening? Also, I gotta love this. I want to point out, again, he's gonna make a ton of money from this video alone. The title is just TCFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFFF
Yeah, if you put Jeremy in front of 1,000 subscribers.
Oh, never mind. It's only at 7.
He's basically breaking every single rule about like how to make somebody watch a video.
Well, apparently you can break the rules as soon as you get to a certain size, I think, because almost like you become the thing that is like so. Jeremy, he might be the very thing that has drawn some people to this live stream, right? Because sadly, or for better or for worse, that is the case. And so for people who make content, I guess, on grifting and whatever, they put his face, that draws content or his viewers because people see his face and they click on it. He is the attraction. Once you kind of step into that echelon, I guess, you can do that, right? It's completely fine.
I have a challenge for you.
Yeah, go for it.
Read the title to the video, not as an initialism, but just as a English word. There you go. Thank you.
There you go. All right, so then it finishes off with this. Book a 15-minute call. So this is where you check out our sponsor, Financial Fortress, where you too can learn how to generate about 30% per year. I'm paid about anywhere from $2,000 to $3,000 per month to say this, as well as a about a 10,000% commission for each person that signs up. So yeah, I guess you could zoom in here and find some of the people, but anyways. Yeah, so this is the thing where he ends off. So I actually have an absolute boatload of reaction requests that I have to get through, and
I'm happy to like come on any night and we just like watch videos.
Oh, I was thinking about doing some right now.
That too.
All right, so I need some filtering help because I'm scared that some of these are just going to be naughty word videos. So like I see you, Fuhat, if you're still in the chat. I see what you put here. It could be not a nice video.
What people like Pokimane do, I know you're not as big as that.
No.
But basically, there's a shared Google Doc that like basically just some people you trust. People post videos they want you to react to, and the mods go through it. And if it's a good video for you to react to, they post on the Google Doc, and then that's like a curated list for you to walk through yourself.
Yeah. Okay, so. Yeah, well, no, he goes to the one in Austin. Do you live in the same vicinity? I won't dox you. Just say yes or no, man. When did the Silence video come out? So, Ricky, I did CE with another stock. I think it was Dow, D-O-W.
The index.
No, not the index, the stock. So I did them together, I believe. I got to update the content library. There's a lot of videos I got to get on there, so... All right, so going through some of these reaction requests, let's see this. I mean, there's portfolio.
You're lagging.
What's that?
Because you had robot voice, and now your stream is like buffering.
On my back?
I'll refresh. Yeah, because I can hear you on Discord.
Yeah, I know.
The stream is, like, catching up.
There's a bit of a lag. That's weird. I have Ethernet plugged in, so I don't know. Miles West, I love you too, random citizen.
I don't know if you want to pull up your stream, but yeah, your webcam's like a PowerPoint. Oh wait, okay, it looks better now.
All right, I'm back.
Yeah, it looks like it. That was weird.
Okay, I think it's the widget causing this. Okay, we back. All right, we're back. So I'm getting a reaction from YouTube. It's telling me this widget. So I think it's something to do with the widget. But anyways, I need the widget in order to pull up your comments, unfortunately. So, I think, okay, so Benjamin reacted for the memes. So, okay, let's go through some of these reactions and see which ones. I want you, Cole, to be my filter. Can you click on the links and just make sure the video, I'm trusting you, Cole, is appropriate for YouTube.
You're posting this because they can't post links, can they?
No. Go to Discord, reaction request. You have access to that. Yeah, you can see all the links of all the people who've ever requested stuff. It's actually not that long. It's decently long. And that's an open invitation. If you're a part of the Discord, you can go on there and drop a link in there. But you're not going to get something inappropriate on because Cole's going to be the filter.
I had two things to say about the. I mean, you can finish, but then I had two things to say about the Jeremy thing.
All right, say your thing about the Jeremy thing because I'm done talking about it.
Yeah. So one, he said the chips are more exciting than the bars.
Yeah.
And I agree, just from like a margin thing. But in terms of
consumer.
Oh yeah, I forgot we made this channel, the reaction request thing. In terms of they're I think it's supposed to be healthy. It's a vegan company so I feel like people are a lot more motivated to go buy like a vegan protein bar, like, I'm being healthy, than they are like, people buying potato chips aren't trying to get like the healthiest thing. So I think the bars are going to sell better for them.
Yeah, I agree. I think I'm more excited about the bars than anything else. I think that, but again, it's like, will they succeed? Will they actually, make it? So yeah, just Cole, what I would like you to do is basically just react to it or just at me when you reply to the comment, and then I'll pull it up. Canoe Health. Canoe Health.
My channel.
Who the heck is Canoe Health or Canoe Health?
It's CANO.
Canoe. Oh, you mean Go EV? But no, he's saying Canoe. Oh, this one, Cano Health. What the heck is this? What the heck is this? I've actually never heard of this company. Be honest. What is this, a SPAC? It looks like a SPAC. Already I can tell it's a SPAC because of this price action over here. So this is definitely a SPAC. What does this do? Let's go link in new tab. Okay, so someone already posted a link. Check out that link. I'm not going to name drop you, don't worry.
Well, I just sent you somebody linked to Bubbleson the other day.
Okay, so...
Okay, no, we're not... We legally cannot play that video.
What do you mean?
Okay, it's not actually legally, but it's more of the newest link. We would probably get in trouble if we played that.
What video is it? Just tell me what video it is. Can you describe it at least?
It would basically it's a Nate Roscoe like video.
Oh, yeah, no.
Warner Brothers.
No. Nate, is that you who posted that? Nate, is that you? If that is you, we can't do it. All right, so this is the part. So it's already linked to the part they want to react me to. So this is good. This helps me a lot. Warner Bros. Discovery loses. Okay, so we're pulled up to this article. This is Joseph Carlson. Some of you subscribers call him, Joseph Bubbleson. And so I didn't come up with that name. Again, I don't have the creativity to come up with that. I'll be honest. So, yeah, we'll see. We'll see what he's going to say here.
Brothers Discovery, they just reported their earnings and it was very messy. They say that they wrote a big loss on content and merger costs. And Zaslav here, he was the guy that was supposed to make this business great. And so far what he's done on this most recent earnings call is blame the previous management and the previous estimates. He threw all of the blame onto everyone else and what they did, setting this whole thing up. He's saying, this isn't my fault. This is a problem with the estimates beforehand. Now, I have the actual earnings report here, and I just want to highlight a couple things on it. First of all, their total revenue decreased by 1%, taking out foreign exchange. So they had a revenue decline. The net loss available to Warner Brothers Discovery was $3.418 billion. $3,418 million of a net loss. That includes a $2 billion amortization of intangibles, a $1 billion restructuring and other charges, and $983 million of transaction and integration expenses. Lots of expenses added in a single quarter, causing this company to have a massive net loss. To give this a visual of how bad this actually looks, we can take a look at this on the chart here. If I pull this up, just take a look at how bad this loss is this quarter. $3.4 billion of net income loss in a single quarter. And the biggest problem they're finding now, which seems to be a surprise for this company, is free cash flow problems. The cash provided by operating activities increased to $1 billion, and reported free cash flow increased to...
What was that?
So this guy sucks compared to Jeremy. There's nothing funny happening.
No, but no. The humor is usually, this is usually sent to me by CPAs or other people, and what?
I was saying, Master Doctor said that the title to the video used to be different, so I don't know if that was part of the joke.
No, but usually, I know it's going to be a little bit more nuanced or a little bit sometimes difficult. It's more how do you say? So he makes more detailed mistakes that I guess accountants will find funny sometimes. Right? That's basically what Joseph Carlson does occasionally, and so. Something he's saying, I'm going to see if he mentions it, but if he doesn't mention it, like I'll point it out. But he hasn't mentioned it this far.
$789 million.
Highlighted it.
So they're saying, look, we have free cash flow, $789 million. And the impression this type of writing leaves to investors is that they're highly free cash flow productive.
Yeah.
And that's not really the case. Because when you're looking at free cash flow, you have to consider what is creating those free cash flows. Is it actual money being taken in from the company? Or is it just dilution? And the problem with saying that they made all of this free cash flow last quarter is it doesn't incorporate the amount of shares outstanding. The shares outstanding went from, in 2021, 589 million to 2.286 billion. So they 4x the amount of shares outstanding. This is where the free cash flow came from. We can even see this more clear on Qualtrim. For example, if we pull up the shares outstanding graph, you can see the dramatic increase in shares, it going up by roughly 4 times the amount. And then if we pull up the free cash flow graph here, this is what they're saying they're doing so great. Look, everyone, we made a lot of free cash flow last quarter. It's right there in line with previous quarters. That's not really accurate, because if we filter this by the amount of free cash flow on a per share basis, it's down to 35 cents, which is much lower than previous quarters.
I'm going to give him the benefit of the doubt that he says it.
It was a decline from the most recent quarter, and comparative to the history of the company, it's nothing spectacular. So that's the biggest problem I see. This company's facing cash flow problems, and in the meantime, they have large outstanding amounts of debt. And people like to talk about how much debt Netflix has. Take a look at Warner Brothers Discovery's
I'm waiting for him to say it.
It went from 13.6 billion 2 quarters ago to the most recent quarter being 50.
Some of you probably already caught it, but
51.39 billion. Let's go ahead and compare this to Netflix. Netflix was talked about as a company that's highly indebted. Netflix has way more cash with $5.8 billion in cash, and they only have $14.23 billion in debt. So they have roughly a third to a fourth the amount of debt that Warner Brothers Discovery has. So Warner Brothers Discovery is facing worse cash flow issues than projected, on top of very high fixed costs with their large amounts of debt. And Rich Greenfield tries to explain how this is working out for them.
I think in this case, a little bit of this is sort of like that movie Apollo 13, right? Where like, Houston, we've had a problem. And I think if you're Zaslav right now, you're going, you're looking at AT&T and you sort of have like, oh my God, I can't believe I bought based on these projections. I mean, John Stankey at AT&T looks like a genius because Warner Brothers Discovery is now blaming sort of the AT&T projections as unreliable, not to mention the overall macroeconomic environment. And so what they're effectively doing, Joe, is they're scrambling to figure out, because cash flow is coming in far below expectations. They've got a lot of debt. So they're sort of finding new ways to generate dollars. You mentioned an ad-supported streaming service, something maybe like a Pluto or a Tubi TV.
And get customers and drive traffic to HBO. Another word,
find dollars.
It's a bigger known brand. They spent an enormous amount marketing it, and compare Warner Brothers Discovery to subscribers by 2025. And I don't like investing in companies that don't have a very clear strategy that's been thought out in a highly competitive market like this one. I think they're in a very dangerous when you don't have a very clean strategy going forward. Right now, I'd rather own Disney or Netflix or even Paramount Plus. That's all the news for now. I hope you enjoyed the episode.
Oh, Paramount Plus. I don't know about that one. All right. So, yeah.
I have a stupid question.
Yeah, go for it.
Is there, because Warner Brothers owns lots of different media companies, right?
Uh-huh.
Like, is there just like one big Warner Brothers streaming service? Do I have to go buy like HBO Max, then go buy something else?
No, so there's HBO Max and I think Discovery Plus. So
is there like a bundle, or I have to buy them separately?
I actually can't tell you that. I don't know that yet because I only have HBO Max.
You can do like Hulu, ESPN, and Disney Plus all as one thing.
So someone said an interesting comment because I've been seeing this echoed a lot here. So yeah, he should have a call map, man. His voice. I mean, we said this in the past. In the videos I've made on Joseph in the past, his voice is very soothing. Very soothing. So
yeah, he's basically Sam Harris.
Yeah, yeah. So one thing I'll kind of highlight is I want to see if anyone caught it before I say it because I don't want to be like, I don't want to spoil it. But Cole, did you by chance catch it with the shares?
Not remotely.
Not remotely, not at all. Did anyone catch it? I will highlight your comment if you caught it.
Master Doctor said something about shares.
Well, no. No. Like he saw that Joseph talked about it, right? Like let me go back to it. Let me just go back to it real quick. But the problem is that it's lacking some nuance here, and it's kind of it's going to be an amateur mistake. I think this is going to this should tell you the answer immediately, like boom to your head. If I show you this chart, you should be like, boom, I know exactly what happened.
What's the chart showing?
Right here.
Shares outstanding.
Yeah, this immediately, boom, in your mind. It should. Well, I'll say it not should because everyone different experiences and all that but like you don't need anything else, just this chart. Someone who can spot it easily can check. All right, I saw someone already said it. What kind of trader do you hold stock? Used to hold stocks. What kind of trader? You mean a brokerage account? Lincoln? Vue? I can't pronounce your last. I don't know.
A little higher up, Austin for you asked. He said free cash flow is coming from dilution. Isn't it wrong because free cash flow assumes it's from operating activities?
Well, no, because we're adding back the dilution expense. Like typically when you have share-based compensation, we're going to check that in just a second. We are going to check that in just a second. But all right, I'm getting a lot of the right answers now. Yes, we are getting the right of the answers. So awesome for you. We are going to check your comment in the financials that they released. But the answer is, I'm letting some other people answer before I say it, but yes, we already got it. The answer has already been stated. So again, you just need this chart. You really don't need much else. This kind of explains it right away. All right. Ba-ba-bum, and we go. Okay, so basically, when they became a new company, you're seeing the old base of shares. And so this new base of shares, a massive amount of them is being created because it's a new entity. So he completely missed that. He didn't understand this. And so, yeah, from everything else, it's kind of flawed. Now we're going to go into the actual...
So like the chart doesn't even make sense?
Because these are actual numbers that he's pulling. Wherever his data is pulling, it's correct. So it's pulling from Discovery because this was the old company. So what you're seeing in front of you is the shares accounting for Discovery Financial Services. Okay, and so you see it in 2022, and then boom, it just jumps. So we won't take my word for it. We're just going to look for ourselves. But again, you just needed to see this immediately and kind of catch that. But yeah, it's because you're pulling from Discovery. I can hear myself, Cole, through you, which means they can hear you. They can hear the echo.
Oh, darn.
Pebbleman, he has not. He has been really well behaved today. Good night, Noam. Have a good one. Rest easy for tomorrow, man.
Every time you say I've been really well behaved, you in the stream, and then I wake up and there's 50 comments going, fuck.
Well, let's see if we wake up with any comments saying that about you tonight.
I gave some pretty good retirement advice.
Yeah, he did. He went full Bob Burger or Rob.
Bob's Burgers.
Bob Burger. He went full Bob Burger up in here. So, all right. So let's go to the statement of cash flows for the quarter. You don't see it right now yet. Don't worry. You'll see it soon. So let's go for here. And then we're going to go really far back. We're going to go on, let me find the old SEC filings. Financials, SEC filings. All right. So let's go to annualized filings. And let's go to 2019. All right. This is all I need. Let's go to, let me pick you at random. I like you, the way you look. Guarantee it. All right, financial statements. I'm going to pull up all this in front. Just be patient, everyone. Be patient, ladies and gentlemen. Scrolling down. Okay, I just want to make sure I get to the right page. Okay, so this is the other complexity. The other complexity was this. So Discovery, I remember this now. Discovery had also, YouTube's giving me the warning again, it's the widget. So maybe I got to get a better widget.
Well, no, there's an issue with Discord too, because you're lagging on here.
That's so weird, because I'm plugged into the Ethernet. I'm supposed to get at minimum about 500 megabytes per second.
You sound better now, so I think it should come back on. And
that's so weird. All right.
Yeah, I think you're good now.
I'll wait for the confirmation on the chat that I'm good to go, and then I'll start sharing. But you can hear me now on Discord, so you can probably respond to me. Can you see what number right now you see before you? So I'm not like, I know I'm not crazy, right? It's about 500 million shares outstanding.
Like before 2022?
Yeah, but anywhere around there. It was about roughly the same around there.
Correct.
So yeah, so I just went, this is the 2019 10K. You can kind of see the different series of stock. I won't go through it too much with you. You can pause it. Oh, let me zoom in. Let me zoom in for you. You can pause here and kind of add them up. They'll roughly equal that basically. So I don't want to spend too much time there. I want to go mainly to this. So this is the 10Q. So again, pause it, keep it there. Get rid of cable. I don't have a cable. It's an Ethernet cable, my guy. So it's supposed to be like the best. This is the first time I'm having this problem. Fabio is plugged into the matrix. Whoa. All right, so we're back here. So this is the statement of cash flows. The statement of cash flow shows a net income loss of about $2.9 billion. This is what Joseph was referring to in the video. And we see them adding back depreciation, amortization, content rights, amortization, and impairment. So this, we already talked about this in the older live stream, so we're just talking about it again. I have no problem doing this. And you see at the end of the day, they had about cash flows positive to about 1.334 billion. But remember, at the end of the day, there were true expenses recognized in the income statement. This is going back to Austin's comment. So expenses were actually recognized in the income statement that actually did lead to cash outflow, and we don't have to reconcile them here in the statement of cash flow. So we're already good. So let's see if they kind of list them here. But it should be those one-time expenses, because in the previous live stream, or was it 2 live streams ago? I think it was maybe 2 live streams ago. Whenever I had Austin and Nawam on as guests, we talked about this company towards the beginning, and I kind of had a hunch, right, that it's one-time restructuring fees, because that's usually what happens more often than not. So kind of going through here, we have restructuring and other charges of about $1 billion. And then cost of revenues excluding depreciation and amortization. So we had various other costs going on throughout. Distribution, content. So I'm trying to see if I see anything outright, but we do have restructuring charges of about $1 billion there. So for example, if you were to just add back that, because you're not going to have that again, hopefully, right? Hopefully, we should have, of course, already from there, cash flows rising about $1 billion. So about $2 billion there, and net income should rise by about $2 billion there, because we shouldn't see that expense occur again, right? Hopefully, right? Why would it? There should be maybe some very small minor expenses, right? Because it's other charges as well. So that line item includes other things. Okay, so if we go down, they already have the operating loss at $3 billion. So we can just kind of scroll back up and see what's really causing a lot of this. So cost of revenues excluding depreciation and amortization. So I'd really like to know that line item broken down a little bit more, because the all in all, it all happened at once. And how I'm checking that is you check out that 6 months ended June 30th. This is the quarter. So most of that happened all in one quarter, but that again could be because larger entity now. So I wouldn't really pay too much attention to that. Selling, general, administrative, same thing, but again, bigger entity there. So not really a problem. Content distribution. So right here, we see a big cost with restructuring. There might be some inefficiencies occurring at somewhere along the chain, but all in all, at the very least, we have that restructuring that's gone. But So the whole share dilution thing, I don't see it here. Let's go down here again. So we see depreciation, amortization, content price, share-based compensation expense. So there goes that out the window. So I just want to say that we're highlighting this, that let's go back to his video. He didn't catch this. This is very basic, by the way. It's not something crazy, but anyways, a lot of this net income loss is, well, at least 1 billion is due to a one-time event. At least 1 billion. To the extent of how much else is due to one-time events, different story. But remember, we have a lot of non-cash expenses going on in there, okay? We add those back, we reconcile them in the statement of cash flows. And so if there was a lot of these share-based compensation expense, I mean, I'm basically teaching him if he's watching this video, but, you know, I'm not going to get into it. But you guys got it, right? Do I have to explain again? So, Cole, did you get it?
I'm busy.
Oh, you're busy? All right. So let me know if everyone kind of got that. Basically, in summary, you know, it's not what he presented here. That's not actually true. Coolio, yes, no. I'm waiting on comments saying that yes, you guys understood. No, you didn't understand. We're dabbing and naying. All right, so that's pretty much the reaction to Joseph Carlson. I'm going to be putting up a new video. It seems that he has asked me, or you have asked me, to react to Sven Carlin. It's all about dividends. It's all about the dividends. So dividends are the answer. Dividends will make you rich. So I'm going to click on this, and I'm going to be taken apparently maybe to the hyperlink. Good day, fellow. Okay, so someone started me right at the beginning of this video. So I'm closing the Warner Bros. Discovery stuff. Please don't make me open it back up again because I'm closing it. So I'm closing that tab. Let me close. I'll keep that open because Trucko really wanted me to look at that. This is the queue. I'll close that out. I'll close this video out. What is this? RBI. We'll get back to you. You deserve more hate. We'll close this out. All right, let's go back to this. All right, so this is Sven Carlin. Sven Carlin. All right, so let's play it from the beginning.
The stock market is a little bit shaky
I know that was
lately,
a joke.
And many of you ask whether dividends are the way to go today. And even in the poll, we
I'm seeing if I know anyone.
Dividends are the way to go today. And even in the poll we made, most requests were for dividends. I'll also make Europe, and I'll also discuss real estate. That was highly requested. So for that, I thank you very much. And of course, make sure to dividend up that like button to support the channel, and that it pays dividends for this channel forever.
All right, Cole, but now that you're back, did you understand my explanation of Warner Bros. Discovery, why it's not the case what he said? I showed it in multiple ways, but if I've
been like fixing a drink and like going to the bathroom.
Getting alcohol?
Yeah,
all right, so you're loving this video because I know you like dividends.
Thank you very much. Let's talk about...
Yeah, and you like Sven.
Hey, that is the Hold on. Stay on the screen. Stay on the screen.
All right.
For like, talk about something for like 20 seconds.
Okay, so he's making an argument here about dividends, and he's basically saying, from what I'm getting, that dividends are the way to invest in this market environment. I don't know if he's necessarily saying dividends only is the way to go in all environments. We talked about dividend strategies in the past and how I don't really care what it is you choose to invest in. As long as it works for you, good for you. So, yes, I don't...
Can you, I don't know if you can, but basically...
Yeah, he's using that exact same...
Have this slide and my thumbnail both on screen or something, or at least show people both of them.
All right, so... Oh, it didn't pop up. No, it didn't populate. So what I'll do... Let me see...
Can you drag the download file over to a...
Does everyone see this image? No, I'm pulling up your image. Everyone can see your image. So you see the dollar bills. Coles wants to show you that he used this in his thumbnail. All right. Oh, it's been downloading it this whole time. All right, anyways.
I thought it was funny that we both found that asset.
Yeah.
The growth hope has deflated a little bit. The old tech changing the world is a little bit subdued. Many of you think, okay, dividends are the reality in the investing world. We should now look for safety, for value, for dividends. And let me show you why you are completely right.
Okay.
Dividends.
So I'll pause here because Awesome For You says, I couldn't hear the Warner Bros. Discovery explanation because of lags, just because of his software that pulls the data from two companies or something. So basically, that's unfortunate. All right. So basically, his software is combining or showing the old count for shares and the new count for shares. It's actually, also, like I said, it's you shouldn't blame it on the software. You should be, not you should, but like we can think about it. And it's something that someone can just be able to catch. Like I said, I didn't really know that until seeing that, because that's the first time I heard that argument. And then when I saw the chart, immediately just looking at the chart that he did show us. So let's go back, because I still have this open. This one. Immediately from this chart, I knew that that's basically what happened. His software is well, he's not looking beyond it, basically. He's being cucked by it in that sense. And so when we see this massive run up in shares, usually there's an extra question that we want to ask ourselves, well, what happened here? Well, it's basically, this is Discovery that you're seeing in front of you. And then that's the new company. So he's assuming, and then we checked again, because I don't think he checked the financials, basically, because if that was the case, if we saw a lot of share-based compensation expenses, we should have seen added it back, because the cash flows you would have added it back. That was his claim. He said that. So that's why I'm harping it down on him there, because he made a claim, he didn't check it. So he was objectively wrong. The share-based compensation expense was very minimal, and there was some restructuring costs to the tune of $1 billion that we found in the financials. And so that we should see, and that because that's an actual a cost, right? Because the statement of cash flows is reconciling non-cash expenses. So any cash expense that was also recognized in the net income isn't reconciled. We don't fidget with that. It's already there, because we're starting with the net income. We start adding and subtracting things that are cash or non-cash, right? So that's what we're basically doing. And you don't see that there. So his claim was false there. It's just a noob tier analysis or noob tier mistake, right? Anyways, that's the quick and dirty explanation for you, Austin. I apologize for the lagging. I really don't know what it is.
Do you remember the Mo video on dividends where he said, "Guys, dividends are Oppa Gangnam Style"?
Yes. What?
He had a little Cartoon Network character doing the Gangnam Style.
No, that was definitely a miss there. I did not understand that one. All right, so let's see here through some of these comments. Let's see here. Okay, so we have a comment from the retail fund manager, which, by the way, still open comment here. But anyways, I don't know if he redacted it or something, or is it still here? YouTube is not uploading anymore or something like that. That's weird. Okay, so dividends are worthless if the stock has no exposure value growth. Sven is a freaking moron, just grifting his garbage. Okay. Oh, well, the punchable face part, you don't have to go there. I mean, that again, when you make these arguments, retail fund manager, you have very colorful language, but when you make these arguments, it's usually like I don't know why you're doing that. But anyways,
the only people you should punch are Nazis.
Well, he wouldn't do that. I mean, retail fund manager wouldn't do that. He'd punch Sven though. Sven's very punchable. Okay, so apparently, I wouldn't punch Sven. All right, but anyways, so going off of some other ones, Mo is the embodiment of "you're not that guy, pal." Oh yeah, he kind of is. He gives me that vibe. Dividend investing is suspicious because it markets to normies. Let me see. This is weird. So it's doing it again where it doesn't actually showcase all of them. I'm kind of curious if Sparky even had his comment up or something. Do you see Sparky's comment in the actual live stream, Cole? Just to check.
I see it on your video, yes.
Not in the comments though, because sometimes my widget does this. So if someone redacted a message, it keeps showing it on my thing. It doesn't delete it, and so I try to.
You're the streamer, I guess.
No. It's because I try to. If someone redacts it, I try to respect that they redacted the message, and so I try not to show it because even though they redact the message, it still shows up. So I can always see your comment through the widget, even if you delete it. So I try to be respectful and say, okay, that person regrets saying that. I'm not going to pull it up. So that's why I have the YouTube comments here and this here. So I try to match it so I don't, okay, you didn't redact anything. So then I'm confused why it wasn't showing you here, but it was showing you there. And I'm asking Cole that, and he doesn't see. Cole, Are you lying to me?
I scrolled up for like 50 comments. I didn't see anything from Sparky.
Okay, so it's not with Sparky. Yeah, you see Bob Smith. Bob Smith, I still see your comment. So he's testing it. Bob Smith, thank you for testing it. So I still see Bob Smith. So he redacted this message, and I can still pull it up. So I try to, be respectful.
Yeah, Bob, thank you.
That's why I was asking. All right. Anyways. So the widget's like a super widget, basically. It just like says, no, nothing, you will not be spared. Everything you say will always be recorded. Just kidding. But anyways, what was I going with this? All right, so Sven Carlin, let's see what his full message is, because I guess that's what we want to say.
Are the way to go now, but also in general. So that's investing. Dividends are the result of investing. And yes, we'll also discuss Berkshire doesn't pay dividends. Yeah. So let me show you something here, the importance of dividends over time. This is a great article by Professor McQuarrie from the Santa Clara University showing stock market charts that you never saw. So very clear, an initial 10,000 investment in the stock market in 1927 is now 9.3 million of nominal wealth. This was in 2008, so now even higher. And this is the chart. We all know stocks only go up. Nothing can go wrong there. Sven, you're an idiot because you say that index funds are not that great, blah, 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 blah. But let's look at this. During the 1852 to 1942 period, inflation was intermittent. So deflation, everything was...
I'm pulling up redacted messages now because I know you guys are joking. Yeah, so like...
No, I'm sorry. Is he claiming that the 1900s were a bubble?
Which one?
Because he just showed a stock chart from like 1930 to today, and he seemed to imply that was a bubble, like the last 100 years.
The last 100 years were a bubble. I would disagree with that. But during right before the Great Depression, there was a bubble. What do you mean? Oh, during 1952 to 1932. Yeah. So what's the chart? Let me actually then go back.
Yeah.
Okay. So this what is this?
Yeah. I mean, obvious. Let's listen to what he says.
Yes.
That's great, blah, 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 blah. But let's look at this. During the 1852 to 1942 period, inflation was intermittent. So deflation, everything was there, stagflation. Dividends accounted for almost all the total return. And this is a chart that nobody's showing you how for 70 years stock went nowhere. So anything can happen next. But let's dig deeper. If we adjust the returns, the chart we have seen with inflation, and deduct the dividends, the 10,000 that went to 9 million just make 33,000 in real final wealth. And this is a chart, again, that nobody shows you. So yes, stocks go up and up, but in real wealth and deducting dividends, you see that there are big dry spells and nothing. So this is, again, 50 years of nothing, and then a little bit up, down to 2009. Now we are up again, but it's very likely that from this up here, we'll again have a lot of years of nothing. So if we account for this inflation and dividends, the truth is that since 1928, dividends plus inflation accounted for 99.7% of the nominal wealth produced as of 2008 by investing in stocks. So yes, dividends and inflation, that's why dividends matter. So when you think about it, yes, it is all about dividends. Let's dig deeper. And then, of course, I make a valuation of the S&P 500, and I get comments, Sven, I cannot understand your valuation on dividends. Now the world is different, and you should value on earnings, buybacks, this and that. Why don't I stick to dividends to give you the real value? Be conservative. If you're right, good. But be careful if somewhere in the next 20 years I end up right. And I did that here in this video. I will put the link in the description below for those that missed it. And now there is the second argument. Yes, but Berkshire...
Yep.
So I didn't see the videos he's referencing, but it sounds like, is he saying that... Is he saying because the S&P 500 has such a low dividend yield that it's overvalued?
I mean, I think he's made that argument in the past. I don't want to put necessarily words in his mouth, but if that's your interpretation, yeah, sure. I'm not accusing you of putting words in his mouth. I just like generally, I don't know.
No. Well, I was saying that's what I heard from him was you can tell an index fund is overvalued by looking at the dividend yield.
And I know what you were going to say, and you're very clever for saying that. Well, what if the majority of the index, as it's been reshuffled, is now into stocks that don't pay dividends, right? That would
basically that's what I was going to say is I feel like in the 1900s, companies were a lot more pro-dividend, and now recently they aren't. So you could just see all the historical data he's shown could be completely like inversed almost.
Yeah, well, it's. I'd probably say that. Well, we'll continue. Yeah, I think so.
Doesn't pay dividends, so you are totally wrong. Am I? Berkshire portfolio, dividend company, dividend with buybacks that push up dividend per share, dividend. If we go deeper, Berkshire takeover for Burlington Northern Santa Fe, 32 billion paid in the first year immediately. What is this? Dividends, and look at the payouts from Burlington over the last years. Now it's already a 15% dividend yield.
What were you going to say?
The kind of companies that, because Berkshire's so large, the kind of companies that Berkshire would buy are so large that it would be normal for them to pay a dividend.
Yeah, you're saying that they are buying mature companies.
Yes, yeah.
Yeah, because I guess we already know where he's going with this. I'm kind of skipping over this. Okay, so he's talking about this. So you have earnings. You can invest the earnings into investing, buybacks, and dividends. I get that. Yeah, cool.
Do you know the kind of history of stock buybacks? Because I heard they kind of ramped up around when Reagan was president. Do you know anything about that?
Well, because for stock buybacks, what is a stock buyback? All right, stock buyback is repurchase of shares. We basically delete it. You earn more of the company, and it's a quote unquote tax efficient way. Not as much as more after the bill that did it pass fully? Or I think it still has to be signed into law. But I think it's like a 1% stock buyback. Yeah, so basically I think they're taxing it at 1%. But before...
Like a sales tax, or how's it work?
No, I think it's 1% of the value attributable to the return of capital via buybacks. It's, I think, 1% applicable. So...
But like the company pays it, or
I think out of the cash, not the owners. I don't think it's the owners that pay. I think it's when the cash from what the company uses to pay the buybacks or executes the buybacks. It's a 1% tax.
So it's like a sales tax, right? Like they want to buy a $50 share.
Yeah, exactly. So then they're basically taxing those buybacks now. So that's Nicholas. You're right up my alley with this question. You are right up my alley because that's actually my point exactly. We've talked about this. Cole and I have talked about this philosophy of dividends in the past. So
Nicholas, the way he phrased the question is correct. If you let's say you're omniscient, you know everything. And hey, here's a company that will never return value to shareholders. Yes, it's valued. It has no value. But my whole point is you can push it back. You can push dividends back indefinitely.
Mm-hmm. Yes, correct. You can't. Well, as long as if I told you there was a guarantee, you would never receive cash from that company, like a guarantee, because you don't have that guarantee when you're operating in the market.
Yeah.
You never have that guarantee. There's always, the potential. So the value of the entity that you have is the potential that it will. So if you buy a private business, you're looking at how much capital can be returned to me responsibly, right? Because you don't want your business to go bankrupt. You want it to invest in projects that are going to yield a great return in the future. And so same with this. That's what he's kind of highlighting here. Okay, so you have the investing portion, investing back into the business. I think that's what he's going to say. And then you could return capital to shareholders in two forms, buybacks or dividends. Buybacks in the past was a tax-free way, but that's irrespective of some details about taxes and and dividends. So, it's not necessarily true that everyone's going to pay taxes, okay? Because there's certain thresholds you have to meet, as well as depending on what account you have. If you have a tax advantage account, you're not going to worry about that. And someone just mentioned Congress has finally found a way to tax you in a Roth IRA. Yes, technically speaking, because if your company doesn't do any dividends, but not necessarily. It's really the tax is not happening on you. It's still happening kind of at the corporate level for an action that they partake in. So, as they do buybacks, they pay the tax. So
fact check me on bacon memes here. He says a company that never returns capital to shareholders only is worth price action and possibly greater fool theory. But if a company never, let's say it's publicly traded, but we know they never return capital to shareholders, it has to be a zero-sum game.
if they never, if you had a guarantee, they would never do so, because that doesn't really exist.
But the people in the market don't know that.
Yeah, exactly. That's why we're doing a hypothetical scenario. Hypothetically, if you knew, and to you that should be worth 0, but like it's still worth it to what some other guy's gonna pay you for it. So if no one else knows that, then technically, yeah, like you're paying it to someone else who is perceiving some sort of value in it, but they're never going to actually realize that value except when they themselves find another person that they can sell it to at maybe a higher price. Yeah, you're absolutely right, but we don't know.
The main point is there's never going to be value created. Like if you buy it for $10 and sell it to $40, somebody's going to lose $30 at some point.
Let's do another example. I have a private business and I sell tickets to all of you guys, and the tickets actually don't render a service or anything like that. All the ticket says is you own 1 share of my company. But let's change it up a bit. Let's not call it a share, because let's remove the legal terminology. Let's just use you own 1 Capital Mindset token. And that's about it. You see where I'm going with this, because it sounds a lot like cryptos.
That's how Sam Bankman-Fried described like interest on tokens and stuff.
That's what but like it's oddly similar. So I give you tokens, and these are capital mindset tokens, and so they supposedly represent. I'm going to use a fancy word, participation. They represent participation within capital mindset, and so I distribute these tokens amongst all of you, and you guys have paid me money for these tokens. So you've paid me, and you now have these tokens. I'm never going to distribute anything to you, and let's just say like you somehow know that. All right, so if you all know that and you have all these tokens, the value of that token is, let's say, some might say it's what I paid for it. But hold on. So you go to the market and you go to your friend and you say, I'm going to sell you this token. And then your friend's going to probably, if they're smart, they're going to say, well, what do I get for this token? Like, what can I do with this token? And your answer, if you're being honest, unless you're lying to them, if you're honest to them, you're going to say, well, nothing. Like, you're just going to have this token. You pay me, I don't know, $100, and you have this token. All right, so maybe
that could have some worth to somebody.
They could have some worth to somebody if it's like a collectible. But let's say it's not unique at all, and there's many tokens, and I can issue more tokens at will. All right, so let's remove the uniqueness of it. Anyone, if they ever want it, could get a capital mindset token. Right? Let's just leave it like that example. So then the value of it is whatever it is you can sell it to some other sucker for, because you're never going to get anything out of it. Now, go back to a share of a company. Even if Google doesn't pay a dividend right now, or maybe doesn't even do share buybacks, so no capital return to shareholders, that doesn't mean it has no value. The value of it is the potential that it one day will return said capital to you as a shareholder. So like, if let's say no one wanted it and we price it down to like a very low selling price, right? You would probably buy up all the shares. That'd be the smart thing to do. And let's say they will return capital to shareholders in the future. The future capital return to shareholders will be far greater in that proportion. Okay, so yeah, that's what.
Can we do the token example again? But so like, just as observers, we know the tokens have no value.
Yes.
But the people actually participating in the market think it will someday.
Yeah, they think you're going to your friend and you're lying to him and saying he'll pay something. This token will have a payout in like 5 years. So you lie to them, so then they perceive that there is some sort of, because there's no way they're going to perceive a value if they know it's not unique, it's not anything like that, it's not a collectible. It's just simply just a token that I will produce infinitely as whoever will buy it, and you want to sell it to them at a higher price. Otherwise, they're not going to do it. So if you're lying to them, then yeah, you'll find a buyer maybe if they're gullible enough. So
I want to point something out. You just got added in the comment section.
Yeah, by who? And I'll pull up the comment. This doesn't apply to Ethereum, for example, because if you want to use the features on the blockchain, you can't do it without Ether.
I wanted to point out that nobody is using the features on the blockchain at the moment. That is not where its price comes from at the moment.
I would say to say that that's the sole value right now priced into Ethereum is not. I wouldn't say it's correct. I don't know. I could be wrong. You could tell me I'm wrong and explain to me why I'm wrong. But yeah, I
would agree that makes it not zero. Assuming there's a. But the point I'm trying to make is, Andre Jick isn't buying Ethereum because he's like, oh, I have to go use the blockchain right now, so I need to buy some.
Yeah, I mean, we can point it. So Andrew Marshall just wants to know if dividends is free money, just to trigger you, Cole. So Bob Smith, that's a funny comment. What the heck is Ether? Some sort of alien element. So, okay, let's continue with his comment.
How the structure of shareholder rewards works, we have earnings, and then
I agree with him with that, but I was looking through his
Now you can be smarter and buy more when it looks ugly and sell or rebalance or change when it looks good. But over time, it is about the business and the dividends and the growth that it allows you to reinvest, like Warren did with Coca-Cola, American Express, and is now doing with Apple also. So sooner or later, it is about those dividends, and dividends are a function of earnings. So yes, earnings lead to dividends. So you can focus on earnings, but it's easier to focus on dividends because those are the real thing there. This is redistributed, but I focus on earnings, but at the end, it should all lead into something tangible for you to as an investor. Because of course, if there are no earnings, there will be no dividends. And now let's look a little bit at the
well, I'll stop there. So that's actually why we talked about this many times in the past, and a lot of the Discord members are. What?
Did you see his typo on the last screen?
Where? I didn't see it. Just point it out because I don't want to spend time looking for it with my eyes.
Dividends are a reflection of earnings.
Oh, oh, whatever. That happens. So I'd say that with regarding dividend investors, typically dividend investors are very fundamentals focused. So, you know, for a newer investor to go into focusing on companies that pay dividends or dividends, right, in general, as long as they don't fall for like the yield trap, they're typically a newer style investor. That when I say newer style, I'm saying, you know, someone who's just getting into investing. They're going to look at, okay, how much are they earning this year? What's their payout? They're going to be paying attention to some good fundamental statistics, right? So it's good. It's not as damaging as other forms of, I guess, let's call it noob tier investing styles that are very common among retail when they're just getting started. So, yeah.
There are no earnings, there will be no dividends. Normal
true,
funds,
no earnings, no
I don't
dividends.
know what these funds do that have 7%. This is something strange likely. And if we look at the normal options, the dividend yields in the environment aren't that stellar. So 1%, 2%, maybe 3%. So dividend aristocrats, nothing to, let's say, really,
let's skip over to what he's saying
investing, here. But at least you get something. And if you're happy with a 3% dividend and you find...
So I'll say like straight off the bat, so BBY, not really a company I'd like. Cisco, you know, careful caution with an asterisk there. It's a tech company. Intel, very similar. This video was from June 4th, 2022. So Intel is currently trading at a 4% dividend yield. We've talked ad nauseum, not really, but we've talked a decent amount of Intel on this channel. There's some cautionary videos. And then, so Intel is where it is today. You know, another stock from, I guess, some popular YouTubers. And then Rio Tinto is one that was in the portfolio. That's the one that did not perform well. I think we were pretty much flat in total. BHP performed much better over the period of time that they were in there. They're still the watcher position, but yeah, Rio Tinto is cyclical, so he does say that. Good for him. Verizon, I don't like Verizon whatsoever. I don't know if anyone out there likes Verizon, but you might have your reasons for liking Verizon. I don't like Verizon. 3M, I think, is a solid company. Solid company overall. They have some lawsuit risks going on, but all in all, overall, it's a solid company. I don't necessarily harp on does it pay dividend, does it not pay dividend. I do enjoy, actually, that some companies do pay me a dividend. Nicole, I will be lying to you if there isn't a part of me that says, gosh darn it, I just got that free money. I'm trying to trigger you.
I like it too.
Okay. So there's a part of me that does enjoy it, and the ability to then take that cash, and if it's a tax advantage account, not having to worry about taxes at all, and having to then, you know, reallocate it to other stocks. That is fun. Okay. I would be lying to you absolutely if I said that's not fun. All right. But anyways.
No, but I don't think this applies to anybody in the chat, but
yeah.
Just, you know, some people think that, you know, this comes up every time we talk about dividends. You know, like a company pays a $2 dividend, and it's free money. Like, it doesn't affect the value of the business after that. If that were true theoretically, like it was just free money they invented by paying a dividend, why would a company not have like a 100% dividend yield? So to make lots of extra free money.
Yeah, you're taking it to its extreme, but yeah, I get what you're saying. Isn't 3M? Yeah. So they're spinning out a healthcare unit because I believe some of these companies, they want to separate the liabilities. You got to be careful with that. Got to buy a BPR. Yes, that's exactly what we're saying. So what you're saying is invest in Honest. Yeah, I mean, like, look, I'm not going to fully poo-poo on Honest. I think Honest was at the time when I reviewed those joke stocks, but it's kind of stretching it. So I'm going to be clear on that. It is still stretching it, and that hasn't changed. It's stretching it. But like, there is a possibility that Honest could actually do well. There is one, but you got to justify the risk reward there for yourself, and then come up to your own conclusions there. My guess is free money because land can be depreciated. Yeah, I know. Bacon memes, you got to put that because newer people, their accountants, they're going to be like, that's not true. But that's funny. What did you say?
It's free real estate.
It's free real estate. That's right. That's what I forgot. So yeah, if you actually take a look at, for example, long-term or dividend tax rates or long-term capital gains tax rates for individuals, you have to make for a single $40,400 before you start paying a 15% tax, and then it's 15% tax from $40,000 all the way up to $445,000. And I'm talking about the United States. If you're not in the United States, forget everything I said.
That's single.
That is single. So if you're making $40,000 a year in long-term capital gains or dividends, you're good to go. Married filing jointly, 0 to 80,000. So basically just double that, right? And then married filing separately, it's back to single. Head of household is 54. So yeah, that's what I'll say about that. Anyways, kind of going into, we got a question here about thoughts on Tyson Foods. We'll get to that. I'll actually.
I've been asking you that for 3 hours.
He's been asking me that for 3 hours.
Yeah.
Oh my gosh! All right, Dead Money. We're going into Tyson Foods, but we're going into that right after this. So I'm gonna keep your.
This is even relevant to your channel, but what do you think about the fact? What do you think about the fact that tax rules are different based on if you're married or not? Just from like a government kind of perspective.
I think that's good because you want to encourage. Taxes are usually to encourage behavior, because this is something that I guess, agree with me or disagree with me, tax rates don't matter that much. They don't matter that much for collections. They matter more in terms of guiding behavior.
Yeah.
That's actually my personal opinion now, that tax rates to an extent do not actually matter for collections or tax receipts.
Are you the one that said tax rates don't affect how much governments bring in?
Yeah.
Am I misquoting what exactly you said?
No. It's to an extent. To an extent. If a government taxes 0%, it won't take any. But no, there's a severe degradation of diminishing returns. So it's more about just volume necessarily. Like a greater predictor of where tax receipts are going is actually economy size. Go figure, right? So go figure that the larger the economy, the more tax revenue a government will intake. That's like probably the best predictor of government intake of money. So what that then concludes is government should do everything in its power to, if it wants to collect more in taxes, to just grow the economy. You grow the economy, it's much easier just to collect more taxes. You get more activity, et cetera.
Can't take in what their citizens don't create.
Yeah, exactly. Well, that's the value it's harder. That's harder to value, right? Because we don't know what will be created otherwise. But like you don't want to encourage behavior of, let's say, hiding. And the United States has a really good culture of paying taxes. There are countries that have terrible cultures of paying taxes. And I'm telling you right now, the IRS would not have the budget if we had, let's say, the culture of Italy, the culture of Brazil for tax evasion. So remember, there's a difference of tax avoidance and tax evasion. Tax avoidance is good. That's like the IRS is allowing you to do this. They're saying that you do this. It's usually an encouragement. They're encouraging behavior. They're saying, if you do this, you get a tax benefit. If you do this, we'll tax you more, right? So they're allowing you because they want you to, let's say, do those things. Like, for example, donating to charity is a tax deduction, right? So that's an encouragement of that behavior. They want you to engage in that behavior. But let's say, in this case, dividends, they're taxing it. Oh, not dividends, sorry. They're taxing buybacks at 1%. So that's trying to discourage it, right? It's not necessarily for the purposes of, revenue creation, even though that might be a byproduct of it. it might deviate revenue from one part to another. You know, there's different effects. So we don't know exactly how actors within the economy are going to change their behavior. But more and more, you'll see that taxes are less relevant than just raw economic size. So if you go to Italy, the culture there is to avoid taxes. They got so desperate at one point that they started police were just literally pulling over people in nice cars and asking for their tax returns. This is the thing that actually happened.
Well, you were required to keep that on you?
They would ask for your name, how much you paid in taxes. They would basically investigate you based off of just cars you drive. So then wealthy people just started they started driving around in shitty cars because it's more worth it just not to pay the taxes. And the government of Italy didn't have the capabilities to actually go after everyone. Same thing in Greece. Greece also has a culture that has a propensity to not pay its tax. So the United States is very lucky. The government of the United States is very lucky that its citizenry is very compliant with the IRS. So good for
now. I know I'm a raging liberal and everything, but I remember, and this is especially common in like 2008. I remember there was like a push for like.
See, we have a lot of. Sorry, I want to interrupt you. We have a lot of Europeans in the chat. I don't know if you're from Italy, but yeah, they literally it's a problem. All right, anyways, continue.
It's like I remember there's a push for like, police should be able to stop people and like verify that they're here legally and stuff. And anytime that came up, I was like, if I was walking outside, I could not prove that I was here legally. Like, I don't carry that on me.
You have you'd be probably part of a data, like you have a social security number, right? You have.
Yeah, I could recite that.
Yeah, exactly. Can you recite it right now just for practice? Like, pretend I'm an officer. Yeah. Like, hey, sir, you are you here legally? I'm going to need some identification, and please share me your social security number. All right, Cole, go.
484174379.
Yeah, okay, there we go. All right, anyways, so that's a little bit of context. So yeah, I did say that, but yeah. So where were we going with this? You asked me about taxes, and you took me on a massive tirade.
Well, we're just talking politics now. I don't know. Some people claim you should always, if you're just out in public, you should be required to have an ID on you, which I just think is silly because you're not what? Because some people don't have IDs because you just it's not like automatic. You have to go get one. What if you lost it?
Yeah.
Basically, you shouldn't be required to have something that's not innate to you as a person. I mean, outside of just for if you're driving a car, I think you should have a driver's license, but not just I'm walking down the road.
Yeah, true. All right, so
dude, Fabio, I just got 5 alerts from my credit card company. I don't think I should have told you my social security number.
Oh, you have a loan on you already. All right, Andrew Marshall says I'm concerned about the problems that people have with immigration. It's so dumb. We literally need more. Yeah, United States kind of needs labor in some ways. All right, rated. Capital Minds' thoughts on Stanley Black & Decker under. Well, so that will take precedence after this video and Tyson Foods, but I can talk about it a little bit. All right, so let's finish this.
20 businesses that give you 3-4%. It's very unlikely that you will be hit hard. And the dividend yield will allow you to reinvest, compound the wealth, and do really well over time. Of course, if you can find higher dividends, better, even better. Plus, if you can find good dividends that have 2 buybacks and have reinvesting into the business at a high return on investment, then you are really looking for the jackpot. That's always what we look for. Or low earnings that will allow for future increases in dividends per share, etc., etc. So that's deeper second level investing. But let me tell you something now that will freeze your mind because it's boring, because it's this, but it's the core of investing. Dividends, inflation, is what makes your return over decades. Buybacks, yes, now it works, this and that, great. But over decades, and here your mind shuts off, decades, Sven, I don't know what will I eat tonight, don't talk to me about decades. But unfortunately, investing is about decades. And when you allow dividends over time and compound my wealth, that is investing. And
all right, yeah, I'll pause you because I know you have a problem with that statement right there, compound your wealth.
No, I was asking, is that Poor Charlie's Almanac right behind him? Have you read that book?
Yeah.
I need to. I've never read it. I need to.
I'm pretty sure those are the ones that the copies are actually pretty expensive.
Oh.
I'll let you.
I can probably find it,
I'm kidding. I don't have a physical copy. Or do
you recommend it though?
Yeah. It's a good book. It's a good book. Like,
the first thing that's jumping out to me is that
it's like,
I mean,
like,
he showed the 99.3% thing. Like, he showed some numbers, but it sounds fake. Was there some?
No, this is not the one that's expensive. Never mind. Sorry, I'm stupid. Port Charles Almanac is the 60. I think that's margin of safety that's expensive.
Was there some fudging done with that 99.3% returns have come from inflation and dividends? Because it just doesn't sound real. But he showed numbers.
So I'd have to actually like look at that study again. I think there was some discrepancy, like, because the inflation is referring to some of the price action accounting for that inflation. So as inflation rose, asset prices rose, and then the dividends were paid out to shareholders. So that's like the tangible amount. Remember I told you that dividends have that added feature that they're basically removing some volatility aspect, because you're getting the cash into your pocket. It's removed from the market. You don't have that extra issues with buybacks. Buybacks has some issues. It's not like perfect. Neither one's perfect, right? Because if I'm a very, very, very wealthy person, and like I have hundreds upon hundreds of millions of dollars in stocks, I probably am going to care more about the dividends than, let's say, someone with a $100,000 portfolio that has some dividend stocks, because we're in different leagues at this point. And so the dividends I'm receiving are going to be treated a bit differently than the dividends you're receiving. So I have to worry about that double taxation, all that jazz, etc. So, yeah, for the most part, that the dividends does have that added benefit of removing that, extra layer of volatility that I would normally have to worry about. Oh, I forgot to say this, by the way. I should have said.
Real quick.
We're going to move on to Tyson.
It doesn't do that if you just reinvest the dividends, right?
What do you mean?
Well, if you just like if you're dripping.
Oh, yeah, because you're basically just buying it, right back in. Yeah, because then what you're doing is still, it could be good. You could be buying good prices. Who knows? So maybe you're selectively buying back. I don't know. Maybe you're reallocating. Like, that's what I do. I don't really have any on drip. I will collect the dividend, and then I will look at what I have, and then I'll reinvest accordingly. Some people say, well, if it's in my accumulation thought, I might actually drip it. So, for example, AbbVie, I'm looking smart in not dripping it necessarily. I'm always looking to accumulate more AbbVie, for example. But, for example, if I were to reinvest all the dividends I have now, it'd be maybe good time than before, right? And I think I incorrectly have that.
I think this is brokerage dependent. Do you some of them you can only drip into the stock that paid the dividend, and some you can like route it to go to whatever stock you want.
Yes, exactly. So I'm talking about just the basic, because like one of my main brokers does not allow me to do that. I have to manually do it, which is annoying. So
so B Ross, I mentioned this earlier because I thought I'd heard it. B Ross says stock buybacks were not legal until 1982.
Yeah.
Because I heard something about Reagan and buybacks.
Yeah, because there wasn't a way before to reacquire shares, which is a bit frustrating to say the least in some cases. But because you don't allow for cannibalization of a company, which Buffett actually really likes buybacks. Buffett likes a mixture of buybacks and dividends.
Do you think if we his 99.3% number that he keeps citing, do you think if we only looked at since 1982, we would see a difference because of buybacks? Like there would probably be more price appreciation.
You'd probably, maybe. I think you'd probably see, because what? No, because you're still. I'm trying to think of the best way to answer that, Cole, because you're still subject to the price volatility.
Dividend returns into price appreciation.
Because that assumes you're removing volatility, which you're not. You're still not. You're still beholden to them, because like technically speaking, you're not going to see this, but technically speaking, do we believe a stock can fall to a very cheap price point? Like, could we see let's say a stock is not problematic, but like let's say you need some extra knowledge, of course, to understand that, etc. But let's say the general public hates a stock, but except you're that one guy who fully somehow understands perfectly that stock is cheap for no reason and everyone's wrong about it, and it's trading at like below a 1 PE.
It's a dividend or a non-dividend?
No, it doesn't matter. It's like, can that happen? Theoretically. Could we see that?
Theoretically, yeah.
Theoretically, it's possible. So you have that. You still haven't separated yourself from that volatility aspect. The dividends are, because like, you take the dividend out, it's in your pocket. So it's separated from the company further. The buybacks aren't. So you do all these buybacks. You do like ad nauseum, just buybacks ad nauseum. And then you have the other guy who's like a different company. Let's say the companies are exactly identical, and except the other guy in this same example doesn't reinvest the dividends. They just keep all the dividends and just pile it up. And then at the end, the company, they both hold it to forever, and they both go bankrupt. Well, one of them has a different return than the other one, because the other one removed that volatility. Now, you might be saying, well, the equity portion of the balance sheet was being reduced the whole time as the company was paying out dividends. You're right on that. But let's say they both, same business, same performance in terms of growth and future earnings, et cetera, blah, 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 blah. They both reinvest the same amount back into the company. It's just their capital return was just different strategies at the very end. So you still had the removal of that volatility in the dividend example, but not in the
this hypothetical. We're
going a little in the
but like, I mean, we're claiming they're consistently paying a dividend. I mean, if it's under 1 PE, what, like over 100%?
No. I moved on from that one. Yeah. That was just an example of kind of saying, can that theoretically happen? Yeah. And then we moved on from that. We were on a different example. We were on an example of two companies. Don't worry about the PE. They're identical. They do the exact same thing. They reinvest, and they had the same results, business results, as they reinvest back to the business. Their only difference is that they have, let's say, 20% in excess. Let's say, whatever. It doesn't matter the percentage that they allocate towards capital returns. They have some percentage, the same percentage allocated to capital returns, and they just do that for 20 years, and on the 20th year, they go bankrupt. And this investor hypothetically holds them both to infinity. They don't know any better, and they don't know when to sell out. The guy who got the return dividend, the guy who got the capital return through dividends did better, because those dividends were removed from that volatility aspect, right? Where the share price could basically just, tank forever. So the other company, while maybe like the stock price along the way was going up, we're kind of being extreme towards the tail end of this example, because what would happen to cause it to go bankrupt, I don't know. But ignoring that, we have a kind of this example showing, well, the dividend has been removing that volatility. It's been taking money out and not subject to the whims of the market. Make sense better or no?
Yeah, no, because I had a video basically with that idea, just explaining why long-term investing beats short-term trading. Because basically, when you're doing a trade, you're relying on, your prediction has to be agreed on by other people. So if you go, I looked at the stochastic and it's going to go up 1% today. That is solely based on what other people think. It has nothing to do with the fundamentals of the business. Yeah. But when it comes to long-term investing, to my detriment, I kind of have to use a dividend company in this example. But let's say you buy Exxon, and I think they pay 82 cents a quarter in dividends or something. And every single person, because you know Exxon's not going bankrupt, they're a solid company. But for some reason, everybody hates it, and it falls to a penny a share.
Yeah.
Well, even though everybody disagrees with you, you could just buy a share for a penny, and you're going to make 8,200% when they pay a dividend. So I was making the point that long-term investing is better, because you're relying on just actual fundamental facts of the company and not relying on other people agreeing with you in the short term.
Yeah. Like, in theory, that's possible. Probably not going to have it. So that's why Yem's and Baba. Okay, so some comments about Yem. We're going back to Yem. In their software age, it's not a lot easier to expand into new markets at lower cost. All right, we're talking about something else. I guess they're talking about Alibaba. Okay, so we are going to talk about Tyson Foods, because Tyson Foods...
They reported earnings, apparently?
I think so. And I don't really pay attention to it too much, but that's one of my wife's stocks.
That was my go-to food as a kid, dude. Those Tyson chicken fingers.
Oh, yeah. She's made them for me a couple times in, like, the air fryer. Oof. Yeah. Oof. They're so good. Using some honey mustard. Oh my God. We will talk about SWK after this.
You want a little look into my life real quick?
Yeah, give me some imagery.
My mom stopped buying them for me because they
Tyson started giving holidays off for their religious holidays for their Muslim workers, so she stopped buying them.
What?
Yeah, she was like, how dare they give them extra holidays?
Oh my gosh. Okay.
My family's horrible.
Oh, Cole's saying that out loud. All right. Well, there we go. We all know a little bit more about Cole. His let me
My
just
QAnon family.
Oh, actually?
Oh yeah, no, legitimately.
Legitimately.
I mean, they didn't go to DC for the insurrection, but you know they read about it.
I'm going to ask you this right now. You don't have to answer yes or no.
Uh-oh.
All right. So, anyways, so we have Tyson Foods
you're not
here.
asking?
No, not for this, just for you and me. All right. So let's see here. I want to pull up Tyson Foods. Tyson Foods, TSN. All right. So TSN. Let's see how they reported earnings today. So basically, what we have, I want to get to their earnings here. Okay, so revenue grew by about 8.2%. Let's see here, total liquidity, which okay, I don't care about that. Okay, so sales were. It's probably forecast if I'm kind of betting on what happened. Warnings on red meat margins. Okay, so we have warnings on red meat margins. Okay. Earnings preview. Leans on cost. Okay, so higher chicken prices. Okay, so basically, yep. Okay, so income posted mix, revenue, operating margin fell. Okay, so we have drop in operating margins, sales. 10.22. Okay. Okay, so Tyson's still targeting that $1 billion productivity savings, so they're trying to cut costs. All right, so let's pull up their financials. But yeah, this is basically the price action that you could see what you saw from Tyson Foods, down 9.38%. Let's find, well, let's just go here. We can just go right to the website.
Now, Fabio, I am not about to drive to Walmart at midnight to go buy some Tyson chicken, am I?
Oh, yes, you are. I need some food after this. I need some food, some energy to keep on going, man. To keep on going, bruh.
We've been, if you include Strongman, we've been gone for over 5 hours.
Are we gonna make this a 9-hour stream? No, I'm kidding. We won't do that. But
I do legit. I mean, obviously you can't do it right now, but
No.
I totally want to do like a 6 a.m. to 6 a.m. stream.
Oh yeah. One day we're gonna 100% do it. We're gonna 100% do it. Where it's gonna be on a weekend.
That might be the in-person meetup.
The in-person meetup. I gotta wait till I move, and then I'm gonna have this. I'm gonna have a sick setup. We can. Okay, so if I get this house, I'm not.
I mean,
kidding.
a beanbag chair to sit in for it.
I am not kidding, Cole. The view is like I am really leaning on this house, but like the view is impeccable, and it will be very good for filming videos. I'm very excited. I am very excited for that. All right. Anyways.
What would you do? Because you haven't bought it yet, right?
No.
Okay,
so I don't want to.
What would you do if somebody was like, yeah, somebody came in like 50% over asking price, and it was like you see Jeremy moving in?
I'd probably move out. I don't know. I'd probably move out. No, but you'll see. Like if I get it, I'm overhyping it, but like trust me, like you'll see it, and that will be like the spot. Like
your favorite dude commented.
It's not my favorite dude. BP still has my heart. BP still has my heart by far. So it's saying, kids, the reason why you have this conversation is because you don't track your performance. I'm a dividend plus value investor, and I've been crushing the market ever since. Okay.
Yeah, I mean, can't argue with it.
Yeah, can't argue with that. This is not even a good topic. The most important value investing is rebalancing and scaling. Freaking clowns.
Wait, what? Rebalancing is the most important part.
I don't know, man. I mean, like, yeah. The guy is not someone who wants to actually even talk. He just wants to like say stuff here and there. So I just like give him the entertainment. I mean, I'm respectful, but yeah. Bob the Midget, check out much Tyson food is in the shelf. I have been feeling they are completely full.
When I go to Walmart to buy it, he's asking me a check for it.
Oh, okay. Yeah, because we need to know. I mean, these are their brands. There you go. So just watch out for these.
Oh, really? I didn't know. I mean, I don't recognize any of that stuff.
You don't recognize any of these? Jimmy Dean,
Sara Lee, Ballpark,
Hillshire
Jimmy
Farm.
Dean. The first 2 lines, and then it just ends.
Ah, okay.
I don't think I don't recognize a single thing below the first 2 lines. Do you?
I recognize some of these. Like, okay, so I recognize which ones? I skipped over one. Big As. I recognize Brian. Steak Eyes. Recognize this one. I like I've seen this in the store before. I don't really know exactly what this is, but I've seen Brian.
Very bottom. I've seen Brian.
Yeah, Brian. I've seen Brian. Yeah, but not really.
Now, what's the point of having that many brands? Because I get like companies that sell food and sell like laundry detergent. I know why they have different brands, but it seems like there's a lot, huh? Like why not name them all Tyson?
Well, okay, that's a different marketing strategy. So I don't know if that guy's still in here, who's that marketing major, but there's breadth and depth. So there's 2 different marketing strategies. Like you can look at, for example, you see, I'm giving you guys a marketing class now, but basically, this is very basic.
Everything is Virgin, like mobile and the.
Yes, yeah, you're getting it. So that's one company that does that. Arm & Hammer, or basically, what's it called? Church & Dwight does that. But then you have Procter & Gamble. That's just like, just everything, just so much, right? So breadth and depth. Oh my gosh, breadth and depth. That's the 2. So you have a company that either has one or the other, or sometimes both. If they're a very big, large conglomerate, they'll probably have both.
I'm pretty sure I did. This was like 6 months ago, maybe. Have I told you about the recurring nightmare I have where I get killed by Richard Branson?
No, never heard that.
It's so bizarre because I barely know who Richard Branson is, but I've had 2 dreams, which is weird because I never have repeat dreams. I had 2 dreams where I was on Virgin Airlines, flying like first class to the Bahamas or something.
Mm-hmm.
And then basically in both dreams we crash on an island, and then
Cole, you have weird dreams. Let me just stop you right there. You have very weird dreams. Now continue.
Richard Branson is like basically crashing Virgin Airline planes to like basically take human passengers as like cattle to experiment on. And basically the dream ends when Richard Branson kills me, and it makes no sense because I don't even care about him.
That makes no sense. I've never had someone tell me that they had how many bruh moments is that? I know you told me that the bruh meter is broken at this point. So yeah.
I keep getting worried that it's like a ghost trying to warn me that's like, no, this is really happening. You need to report this.
Oh, so Sam paid I think that's New Zealand dollars just to tell you this.
Yeah. Okay.
Cole only gets wet dreams. Thank you, Sam Beers.
I don't think I've ever had one of those.
The New Zealand dollars? I think that's New Zealand dollars.
Fuck up.
No, I think that's New Zealand dollars.
I was thinking sex ed. They were like,
sorry.
Wet dreams is just a normal thing of going through puberty. I don't think I ever had a single one.
I think we should steer away from that conversation. This is not the place for that.
Well, you got paid to talk about it, so.
Oh yeah, I did. Okay, yeah, but I got paid to show you that comment. That's how I think of it, and I think Sam Beers enjoyed you reading that comment out loud.
You know what's bullshit?
Where is the SEC filings? I'm like blind here. I cannot find the SEC filings. I'm about to just go type in Tyson Foods SEC filings.
I need to share dreams with us because this is a while ago, but I was still older than you should be. I guess I was like 9. I think.
Oh gosh.
Basically, I have a dream where I'm scuba diving.
This is what the people came for.
The scuba diving coach is like, yeah, dude, you can just pee in the ocean. It's cool. So I start peeing, and I wake up, and the bed's wet. And I was like, that fucker, my own dream told me to pee. And he tricked me.
Okay, well, I don't know how to react to that, Cole.
That is not an uncommon experience. You can go Google people, and they will be like, yeah, I had a dream where I was peeing, and I woke up and I was peeing. You have to share one dream, you fucker. You have to share. It doesn't have to be that weird. But you have to share a dream you had that was interesting.
I had one of those. What are they called? The scares, the nightmares.
You didn't remember the name of that?
What are they called?
Yeah, a nightmare.
No. It's a specific kind where you cannot move.
Oh, sleep paralysis.
Yeah. No, but it was night terror. I think that's what. Yeah. So it was so creepy, man. I was laying in bed. I was like, I think I was 18 years old, and I was just like, I woke up and it was so weird. You know, you can't move and it's weird, and you're like trying to move but you can't move. And I looked in the corner, and the corner by the door.
Bill Cosby.
What?
You saw Bill Cosby.
I saw Bill. No, I didn't see Bill Cosby. No, I saw this like dark girl figure. I don't know why it's always a dark girl figure or something like that. Like, because I guess girls are scarier. But I don't know. And then it started walking towards me. I was like, oh my! You can't even like say anything. She's just staring
like a normal human, or
no, just like walking very ominously and very slowly towards me, and I cannot move. And I felt like this, like as if something was basically like this thing had a what is it called, like telekinetic powers, and then just like pushing down on me because I couldn't move. That's how your brain rationalizes what's going on to you. That's basically what a night terror is. So for any context, I'm just describing a night terror. So
yeah, I've never had, because I would shit myself if I had sleep paralysis. I've never had that happen to me.
It's only happened to me once. So Bob Smith says he's had it, and yeah, it is creepy. And bruh, oh my god, that is such a bruh moment. Yeah, oh my gosh, man. And that is how he met his wife. Yeah, man. All right, so Bob the Builder, blah 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 blah. Okay, so is Bob the union rep? All right, so let's go to here. Let's go to let's see how they did. Oh, wait, I clicked on the wrong one. Let's go to the income statement. All right, cost of sales. So let's take a look at gross profit. That's one of the most important for these kinds of companies because we're trying to see or gauge how they're able to kind of manage inflation. So it does seem from the prior quarter, it's not too bad. I mean, gross profit is down, but it's not egregious. So, we are probably potentially getting closer to that peak inflation number. So that's all well and good. Class A, Class B, because they have, the two classes of stock. Okay, whatever. It's not a big deal. I want to see their current statement. Capital Mindset, why would I buy Google shares class that doesn't have voting rights? Oh, you asking me that as a legit question? You could have just asked me that verbally.
I didn't want to enter. I typed it in so that I would remember for when you were done with Tyson.
Okay, but I can answer that while I'm doing this because there's two classes of stock here. But because it still has economic interest, so that's what matters: economic interest or the differences in economic interest. So voting rights. There once was upon a time, and if you're old enough to remember this, I'm just kidding. It's not. You don't have to be that old. But Google stock and Goog stock were actually switched. So let me go back and see if it's still the case. So GOGL and then GOOG. Yeah, so back in the olden days, they were actually switched. So if you were investing since like at least 2017, you remember the days, at the very minimum, you remember the days when it was flipped, when Class C was worth less than Class A, and there was actually a premium to the voting shares. That switched because a lot of the buybacks are actually concentrated in Class C. So that's small discrepancy.
So I guess, why would I buy the voting rights one then?
Why would you buy the non-voting rights one? What are you talking about? Now the voting rights is cheaper. Back then, people were making the other argument. Back then, people were saying, I'm getting a very small marginal increase in economic interest by buying the non-voting versus the voting. So people would buy those. Now it's flipped on you. And I, by the way, the whole time, the only ones I've accumulated, because for me, I like the ones with the voting power. I only have the voting power one. So GOGL. This is the one I own.
I guess I'm trying to phrase my questions right, but is there is there some kind of like scenario where people are like we go full crazy, unrealistic? Is there some scenario where the non-voting right shares are just worthless?
Say that one more time, the last part, because I heard the beginning of it and then I saw a text message.
Could something happen? Like doesn't matter how realistic it is. Could the Google shares without voting rights, could they just like drop to zero one day because just something happened?
I mean, that would be an anomaly, but sure, why not? I don't really know. Maybe it could happen.
Could somebody get all the voting rights shares and then be like, hey, your shares are gone or something?
No. They can't just delete your shares like that.
Or I mean, could they like mass dilute the non-voting right shares? Or
Well, but the thing is, they're tied to the equal economic interest. So it's the same economic interest. It's just voting rights. So a lot of these shares are the same economic interest on a per share basis because they're not a VIE. You're describing a VIE.
Yeah. So is there a reason? Is there a reason to ever pay why would somebody pay a premium for voting rights?
Don't you want a say in? So like if you're wealthy, very wealthy, would you not want a say in the company?
Okay, so I mean, but
if you're just a standard Joe, yeah, probably not. Yeah. Right, but this is actually a way that Alphabet gives stock to their employees because that's actually what this originated as. So the Class C, because Class B is not available to the public, that's just for the founders. So Class C is what the ones that the employees at Alphabet get. They get this. And so this is the one that they mainly focus the buybacks on to mitigate the dilution. And so in doing so, it's still the same economic interest. It's still the same exact allocation. So if they dilute, if they create a bunch of Class C, they're going to, dilute the economic interest for everyone who holds the shares.
Could I start my own company, have 2 classes of shares, and I just always keep 100% of the voting rights, and I just hand people out the non-voting right shares?
100%. Yeah, you could have in theory, you could. I don't know how that'd go around really well, but you'd have to be giving up economic interest. Yeah, it'd go pretty bad. But you'd have to be giving up economic interest. There's a lot of companies that have 25% voting rights to the public and 75% to the founders or to the original owners. There's some that have 80%. So that there's going to be different variations of that, but for the most part, you're going to have. It's all about that economic interest. If that economic interest is equal, and then we're not getting into a whole complicated structure like a VIE, for example.
All right, I think I'm done for now.
All right, so that's that question, ladies and gentlemen. All right, so back to Tyson Foods. So Tyson Foods, in terms of the balance sheets, I think last time I checked them a while ago, they were pretty well capitalized. So you actually see long-term debt sitting at $8.261 billion. It's pretty much same as last quarter, so a year ago they were about the same. Cash is what came down. So if we want, you know what we're going to say here. So for those of you who are just joining us, there's a reference to when we reacted to Jeremy Financial Education's video on Tattooed Chef. I'm going to reference it now. So if you're just coming on, you're not going to get it. But I see that accounts receivable at $2.51 billion. They better pay up. Where's my money, Brian?
Shut the fuck up.
Where's my money, Brian? Someone should definitely make that meme. Like they post that part of Jeremy saying that, and then that clip from Family Guy. But anyways,
that was you. I couldn't even tell because I was try saying that a little bit more like Stewie.
Where's my money, Brian?
That's pretty good.
Where's my money, Brian?
It's almost like if Stewie was on South Park. That's what that sounded like.
Yeah. Okay, so I think that's so Tyson Foods. I mean, I'm not buying it for the sake of diversification within the portfolio. It's down. I'll ask my wife if she's interested in buying more. Actually, why not just text her? I'll just text her this. I'll be like, hey, she might be sleeping because she's got I was about to text the group chat between me, her, and the realtor. So hey, are you buying more Tyson? All right, let's see if she responds. If she responds, remember that's the bullish signal. I'll text my. Let me actually also text her that. Hey, you up? With a winky face. Hey.
Wait. You have to put the eggplant emoji.
You up? All right. No. We're gonna go winky face.
Fabio, was there an eggplant emoji on that text?
I won't confirm or deny that. That's private, man. It's private.
Guys, we get a $5 donation. Fabio will show that text message and confirm it.
What is that?
If you guys, whenever I hear "Hey, you up," I immediately think of the SNL skit with Eli Manning. Have you guys seen that in the courtroom?
She said she's not sure.
You're not sure if she's up?
She said no. I asked that afterwards. She responded to the Tyson question. I'm not sure, babe. And I said, and she said, why? Question mark. And then to the hey you up with the winky face, she said, WTH. Okay, so let's see this.
Have you seen the Eli Manning SNL skit?
No, I haven't.
Basically, I'm gonna run by it super quick. Basically, Eli Manning is in court for he's charged of murder, and his lawyer, he has an alibi, but it's his text message history from the time of the murder, and so the court is going through his text message history. They're like, okay, between 11:37 p.m. and 11:38 p.m., you sent 17 text messages to 17 different women, and they just read off the text messages, and they're like, hey, you up? You up? You up?
Oh, bacon. I thought you were saying capital. I didn't see the misses. Oh. Sorry. Yeah. So Andrew Marshall's saying something. I don't know what you're talking about. I don't know what that name is, but I'm just kidding. But something has gone meta. Look at this. We can't see if you send links here. So if you want to send a link, you can put it in the Discord, and Cole can have pull it up.
Is buying meta?
I don't know if that's what he meant by that, but
that is not what he meant.
Yeah, that's definitely not. It's probably more like I don't know. I don't know what it's meant by that. Oh, you put it in general. What did he see in general?
That's just a penis.
Oh
no, he's at a nightclub in Thailand. That's funny.
Yeah, Gunnar, that's literally that's nothing new. Welcome to the thing, man. That is nothing new. Yes, I called you. Wait, what do you mean you called me? Oh, okay. I mean, like, you called me.
Maybe he removed it, but Mike, he has a video where he just goes up to like 5 different Taiwanese women, and he's like, "Oh no, that's different than Thailand, is it?" Anyway.
Yeah, you said Taiwanese,
Thailandese. Okay, I've never actually heard that word. Yeah, the point, he goes up to 5 different women in Thailand, and they're like, "Oh, I love big American man," and I'm just picturing this dude going up to these women and being like, "Here's $5, say this for the camera." I'm like, that's disrespectful, I guess.
Bro, now he's gonna come after you. I remember the last time someone questioned or said something about Warren Buffett. He kept attacking them in his annual shareholder to investors, or annual meeting for investors. He never gave it up. It's usually like yeah. So Andrew, yeah, that's nothing new, man. That's literally nothing new. All right, so I gotta remember to talk about. Oh my gosh, Ricky, what is this comment? Oh, okay. Now the conversation's changing into something else, you guys.
You probably don't, because you're not up on internet culture. But there's you know DJ Khaled. You know who that is.
I know who that is. Yes.
Yeah, and you know he's a big guy, right?
Yes, he's actually the guy. He always films on his jet ski in Miami.
Maybe you haven't seen this video then. He has So I mean, this is from like 8 years ago. He released some album, and they got like #1 on the hip hop charts. And so he goes to Jamaica to celebrate it. Have you seen the celebration video?
No. Wait, let me answer Andrew. Andrew, the jokes come from that. So it's not the other way around. It's the jokes they come from that. But yeah, anyways, continue on.
So it's basically celebrating his album, and so the first like 30 seconds is just like a quick. They're showing different clips from his Jamaican vacation, celebrating getting the #1 trophy, #1 album on the hip hop charts. Mm-hmm. And so it's like him on a jet ski, and it's like him on a boat. It's him like eating breakfast, and all of a sudden it cuts to him in bed with a woman, and he's so fat you can't even see the woman, and he's just like he's like, "Oh yeah, you smart," like, and then just cut, and it's so bizarre because it comes out of nowhere, and it has nothing to do with the rest of the video, and it's disturbing because he's so big. Let me see if I find you a clip of this while you continue talking about stocks.
I mean, all right, yeah, just show us that one, and we'll see, because I want to talk about Stanley Black & Decker.
They make like coffee stuff.
It's at least advertising for his firm, but anyways, doesn't matter. Oh, so yeah, I'm gonna let other people respond to that, because you don't want to get Warren Buffett mad. Anyways, Stanley Black & Decker. We're looking at this company. we did videos on this in the past. You know, never really added to it. Now, I mean, it's trading close to COVID lows. I got to imagine that if I do another look at it, really look at it, it'd be somewhat interesting. I'd imagine, right? I'd imagine. He's the oh, okay, you guys are, yeah, McBuddha T. All right, so taking a look at this company, I mean, some of the risks highlighted in the last video is a lot to do with inventory buildup at, you know, places like Home Depot, Lowe's, stuff like that. But they also do a lot of other products, right? So I just want to go over them again. So our businesses, you can see here, our brands. You might know some of them, but they're involved in a lot of industries. They have Stanley, very famous, DeWalt. I believe Craftsman they acquired from Sears. I think Sears used to own Craftsman, and this was actually part of their liquidation. So this was a good brand that Stanley Black & Decker acquired. I believe it was Craftsman. Then going over, they have Stanley's Engineering. So they have a bunch of different businesses across the board. They have Stanley Security, Stanley Healthcare, Stanley Infrastructure. You can kind of see and get an idea for what this company's doing there. They have their you guess tentacles in a bunch of other businesses. So I think Paladin, what is Paladin again? So yeah, this is the attachments that go on to it, not necessarily the vehicles. So if you were curious, it's not the vehicles themselves. And then this one I believe is also that. So compact drilling drives. So it's specifically these drills. Okay, so you could see that what kind of scenarios would be good for this company, what kind of, let's say, what would have to happen for this company to have more business? These are some things maybe we start to think about, some massive infrastructure spending, a lot of construction in new homes maybe, a lot of people doing, you know, fix it up yourself, a lot of, basically a lot of infrastructure spending and development. Yeah, and a lot of industry. So if industry is doing well, potentially this will do well. You also have some home brands that you might be familiar with, like Black & Decker. Again, you might have DeWalt tools or Stanley tools at your house. You might even have Craftsman workbenches, etc., stuff like that. So, yeah, it's a lot of these you're going to know. Capital Mindset, can you have a look at Rothschilds & Company? Yeah, I can look at Rothschilds & Company. Why not?
Black & Decker made my coffee machine.
You have a coffee machine for Black & Decker?
Maybe.
I didn't even know they make coffee machines, to be honest. Oh, yeah, they do. Wow. I did not know that. I gotta be honest. I did not know that. So yeah, they have a lot of household companies. Look, Jim Beam, some product placement. This is a 12-pillar stock. Yep, this is a 12-pillar stock. You heard it here first, folks. So let's see here. Palantir's cousin. They have 8 or 9 businesses up. Oh my gosh, you're too funny, Pepe. I just started reading Ricky's comments and bruh. Yeah, Ricky's spicy, man. Big bruh moment. Yep. All right. So what were you saying, Cole?
I just want to go check. It's actually a Cuisine Art coffee machine.
Oh, okay. But yeah, I mean, this one's an alcohol machine.
I found the clip that I would love for, you know, you can finish this first, but I would love for you to just play 30 seconds of this video.
No, go. Well, will it get me demonetized?
No.
In trouble. Strike.
No.
All right. Then go for it. Play it.
Well, I can't play it.
Well, no, send it to me and I'll play it.
Yeah. Now I'm giving it.
They don't own Jim Beam.
I'm time-stamping you, not super long, but a good bit before it happens, just so there's enough build-up that it's a shocking.
Oh, sorry. Let me lower this volume. I don't want to blast people's ears.
Another number one.
It's completely normal. It's just a.
Wait. Was it the booty thing?
No. You'll know.
Number one record in the country. Hold you down. We gonna celebrate. You smart, you loyal, you a genius.
What?
What the hell was that?
What is this?
Why was that included? You can only see her feet barely sticking out from his body.
What have you done, Cole? What have you done?
It's just the stupidest. This guy is such a goofball.
Yeah, being PC there right now. Oh my gosh, guys. Did you guys enjoy that? Did you guys enjoy Cole doing that? Bruh. React to the I am holding a building video. What? I am holding a building.
No. It's I just search I am a building. You will enjoy this a lot.
McBuddha is saying you're trying to take down the stream again. Is that true?
Yeah, it's true. No, you'd search I am a building. You would get a kick out of it. It's very famous.
Yeah,
it's not bad. It's not bad.
Bruh's like keeping count, and you like just shattered the amount of bruhs that have been said. Cole, you're fired. No, this is good. Bruh's like, no, this is good. This is good. You guys enjoyed it? All right. So that's one way. Another one.
All right. Bobby, you search I am a building on YouTube.
I'm scared. I'm so scared. This one?
Yes.
But
top one. Yeah,
okay,
top
but
one.
look what the title says, Cole. I'm scared.
Yeah, I mean that's what. Yeah, no, it's not bad. It's like a PSA.
Don't be racist. I am a building, and I've got news for you. Hey, there's Steven. Blacks and whites are even. How would you feel if the joke was on you? Blacks, whites, Indians, and Spanish. They all came from the sea.
The first line is basically the whole joke.
We all have to share the same world. Trixie, won't you sing with me?
Hey, Stan.
What?
Hey there, Trixie.
Okay, that's so weird. I can't believe this.
You'll now that you've seen this, you'll notice this pop up on. It's one of those things that you don't notice. It's referenced a lot online. I think you will notice somebody reference it in the next week or so. Somebody's gonna go, "Don't be racist. I am a building."
Oh my gosh! I mean, I
very catchy.
Okay, yeah, I guess that's an internet joke there. And someone's saying, "Nope, WTF." What a miss. So people like it. I am the building video. Okay, so I didn't know that exists.
Let's clarify. Bruh recommended that one, not me.
Everyone's gonna fight in the comments now. And I'm like, bruh. All right, so let's go over, I guess, this company one more time. So yeah, Stanley Black & Decker. I'd probably do a video on this just to see what's up because I'd be interested in seeing if I can buy it.
You got to check the 5-day chart.
Yeah, the 5-day chart's the most important chart. Oh boy, woo-wee.
SPY is 0.97 as we check.
It's like from Rick and Morty. Woo-wee.
Woo-wee. Oh man, I really enjoyed this, Rick.
Oh yeah, that's actually what it's like. Yeah, you did it better. All right, so as long as it's bruh approved, we approve. Okay, there we go. So they approve it. They approve it, boys or ladies and gentlemen. All right, so let's see this. Any other reactions?
On the CDP climate change score.
Oh yes. Oh yeah, that's right. That's the actual. That tells you when to buy or sell. So you guys know that, by the way. Depending on what that score says, you buy the stock or you sell the stock. It's almost as important as the book value. Wink, wink. Anyways, no one's gonna get that. All right, so let's go to the reaction request. Most violent Wall Street bets losses. Let's pull this up. Let's go. Oh wait.
So you said
made in partnership with the Daily Upside,
I've never
a
seen
daily
Benjamin.
newsletter that reached out to sponsor me.
Quality,
I said I'd take a look at it because I wanted to get paid. Now I actually read this religiously. Visit the link in the description to learn more. A lot of the time I find myself getting wrapped up in things that aren't really that important. I'm sure all of you guys can relate to this feeling. Your job's not going well, you're failing your classes, you pushed on a pull handle for way too long in front of 6 people to the point where someone actually stopped what they were doing so they could come over and try to help you. Or other, oddly specific things that didn't happen to me in the past week. Now, these things happen to everybody. They happen to everybody. They happen to everybody. And they can live rent-free in your head if you let them. However, sometimes all it takes is a little perspective to recognize how good you really have it. And what I've found is that there's no better way to give yourself this perspective than by looking at crippling financial losses on Wall Street bets. That's the philosophical spin I tried to put on this. In reality, I just like looking at these losses because it's fun. And it teaches you exactly what not to do. So today we're going to take a stroll down memory lane, looking at some of the most violent financial losses you have ever seen or will ever see. Oh my god, they're so bad. I'm guessing if you already watch my channel, you're starting to become kind of desensitized to massive financial losses. After all, it's just numbers on a screen that don't actually translate to anything in real life.
As much as the other ones, you've already desensitized
But if you're new to this whole investing, stock market kind of thing, this is probably going to be somewhat jarring. The losses we're about to look at are the quickest and most violent way any average person could ever lose money. It would actually be harder to go to the bank, get hundreds of thousands of dollars in cash, drench it in gasoline, and light it on fire. Like, that would take longer. So prepare yourself physically and mentally, because we're about to visit the graveyard of Wall Street bets. The graveyard of the internet. But before that, we have to learn about the architecture of financial losses. Not all are created equal. I'm guessing a lot of you newcomers are probably going to be asking, how? How could you lose so much fucking money? Also, you're probably going to notice throughout this video that there are some patterns that are remarkably consistent throughout the entire video. Let's break this down. Nature has the golden ratio, the Fibonacci sequence, a sequence of numbers that strangely seems to show itself everywhere in the universe. Flower petals, shells, hurricanes, even galaxies seem to follow the same pattern. In financial losses, we see a few different patterns. Let's start out here. This is just a classic Wall Street Bets loss chart, and a pattern we'll most likely see often throughout the rest of this video. It's actually funny how perfectly this represents investor psychology. I feel like I can tell you the exact thought process at all of these points. So what happened here? Let's use technical analysis artwork technology to try to uncover the truth.
I'm guessing
we can break
index
this down
and then
into
options.
a few
That's what I'm
psychological phases. Let's start here at the beginning.
Index funds.
When you first started investing. Maybe you read The Intelligent Investor. Maybe you figured you should start throwing some money into an index fund. The reason doesn't really matter. What matters is that this is the first and last time you'll make money doing this. You've probably got a good diversified portfolio of blue chip companies that are heavily correlated with the S&P. You were so innocent. Now, what you're seeing right here, I like to call experimenting with the dark arts.
Options?
This little spike right here, it's so funny how accurate this is. This is you discovering options. A brief view into a world that you had no idea was even possible. You can never return from this place. Pandora's box is open. Despite you feeling like you're learning so much, I promise you this is the end of your financial career.
This is the end of your financial career.
I like to call this period volatility exposure therapy. The market doesn't want to scare you away with big volatility. You'll disable options forever. Instead, it's going to let you test the waters a little bit, just enough to push you into the next phase. Degenerative risk-taking behavior. That one's pretty self-explanatory.
This is Cole.
And it leads us into the next phase. Jacked to the tits. You're convinced you are Warren Buffett. You have a money printer in your pocket. This phase usually lasts a few hours to days, and it leads us to the final phase. Imminent destruction. Now, despite what you might think, imminent destruction doesn't happen here. Imminent destruction happens here, the moment you enable options trading in Robinhood. This is incredibly important to understand. So that's a brief overview of the most common financial loss chart. Understanding each of the phases can help us determine the psychology involved with losing hundreds of thousands of dollars. Now let's get into the most violent financial losses you will ever see. But quickly, to introduce the sponsor of today's video, the Daily Upside. A daily newsletter written by a team of former investment bankers, scholars, and journalists. Some of you might not know this, but a lot of the headlines you see in whatever finance app you use are generated by AI. And for any of you that were scared AI was going to take over the world, all it takes is one look at these headlines.
So we'll cut the stream here. So that was, I mean, that's just
making me want to watch this video.
All right, I'm gonna skim through it because I need to also go to bed. I got work tomorrow, man. All right, skip the sponsors. Skip so sponsors don't win. Sponsors don't win. That's out of principle. The option should be unavailable to low net worth individuals. No, I don't think that. I think that
that has equal problems.
Yeah, that has equal problems. I think that we should just encourage people to know the dangers of options, and just like maybe let them play around with fake money on options, and so they can test out the waters. All right, so
monthly option stimulus checks.
No, Lincoln. It's Cole that's ending this stream. I mean, he needs to go to bed. He's a little weenie baby.
Clarify. We've both been streaming for 6 hours.
Upward amount where it's not really enough. The implosion.
Yeah,
classic.
I can't do this
we
for
can
the rest
see
of the week.
already $50,000 has evaporated. This was another GameStop implosion.
Goodbye, Cole. I will finish this video and I will end the stream.
I bought $90,000 of out-of-the-money calls expiring in 2 days. For those of you who may not fully understand what that means, I joke a lot about donating money to Wall Street on this channel. That's usually a joke, but this is actually like taking $90,000 out of your bank account, calling Goldman Sachs on the phone and saying, hey, I want to wire you $90,000. And the funny thing is that would actually take longer. This is a perfect example of why it's incredibly important to recognize that buying a call isn't the exact same as going long on the stock, and you need to understand implied volatility before you mess around with options. This was posted on March 11th, right at the peak of the second GameStop rally. The problem is that a giant rally like this increases the implied volatility of GameStop options so much that the options market is literally pricing in 100% moves in GameStop's share price. This is a good lesson. It shows us that before putting $90,000 into something, reading even one Investopedia article might save you a lot of money. Alright, an 18-year-old making 100 grand with AMC calls, then losing it all. Pretty classic story of Wall Street bets degeneracy. What is $100,000 really? That's like free college tuition. The exit strategy. The thing all of us know we should have but never actually end up using. With this, we really once again have to beg the question, what would have been an acceptable return? If 10xing your money in a matter of weeks wasn't, is there any return that would have ever made you sell? Just something to keep in mind. This is so funny. Apparently at Fidelity, if you lose thousands of dollars, they send you a nice letter checking in to see if what you're doing is, consistent with your investment objectives. And to see if you're still alive. At Fidelity, we believe it's important for investors to periodically review their investment strategy to determine whether this activity is still consistent with your investment objective. This was posted in November of 2020, which means the S&P returned over 50% in the 6 months prior to this. Like, looking at this, it's actually remarkable how consistently you were able to lose money in a time when the S&P returned so much. Won't go back to Robinhood. I think this guy brings up a good point. I'm just gonna take a wild guess here and say there is probably something fundamentally wrong with your trading strategy. I guess the lesson here is to never bet against the Fed. Painful $500,000 loss. Warren Buffett said something about how consolidation builds wealth and diversification protects it. I don't know if this is what he was talking about. American Airlines, not a bad play for the pandemic recovery. Probably a situation where you want to buy shares though. Seeing this is just painful. How much money do you need? Going into this with out-of-the-money options just seems like a recipe for disaster. And, of course, the clowning ensues in the comments below. Love to see it. So...
Oh, it's before...
What was the thought process here? I'm genuinely interested to know. Obviously, you guys can see the situation. Another GameStop millionaire turned $35,000 into $5 million. This is a perfect example of if it's good enough to screenshot, it's good enough to sell. I think this comment just sums it up pretty well. If you turn $35,000 into $5 million and don't sell, there is no amount of money you could have made that would ever make you sell. $5 million invested into an index fund returns an average of over $300,000 per year on autopilot. I mean, fuck, throw that money into AAA corporate bonds with a 2% yield and collect $100,000 per year for the rest of your life. Do anything. Anything except what you did. Is there anything we can take away from this? Well, from everything I've seen, it seems like no matter how much money you have, it will never be enough, especially when it's just numbers on a screen. What's one common trait between all of these losses? Greed. Icarus flying too close to the sun or whatever. If it's good enough to screenshot, it's good enough to sell. An ancient piece of Wall Street Bet's wisdom that we all need to remember sometimes. Create a solid exit plan with all of your trades and stick to it. Or just buy index funds and actually make money. But where's the fun in that?
Oh, I like the little twist he does where he gives you that sound, responsible advice. That one advice at the end. Just like, or index funds to actually make money. All right. Oh my gosh, that guy, he hit the jackpot for his life because maybe that was his whole portfolio, 35,000. He hit $5 million. $5 million. Like, oh my gosh. Like that goes, well, that's like the difference, guys. Like, okay, whatever, if he's young, he's going to have to ask himself right then and there. If, you know, we were talking, I'd ask him like, okay, what is the probability that you're going to make 5 million again? And if, you know, your answer honestly, and maybe the answer is no, not likely. Yeah, you focus on capital preservation. Oh my gosh. I mean, he still made it out. He still 10x his money, but still like, oh, jeez. All right. That was cringe, but also funny. I can see why this guy is very well liked. I can see why he's liked. The quality of the video is really good. Benjamin, you know, really good. You like the video right there. All right. So with that being said, guys, thank you guys so much for joining me on this stream. This stream lasted almost 4 hours, but technically, if you count Strongman's, I've been streaming for about 5, almost 6 hours. So it's been tough. But you guys been a great break for me today. So yeah, tomorrow I won't be able to do this for the rest of the week for sure because I gotta then make up for today because I'm not gonna be able to do one of these sections today, so I'm gonna have to do them tomorrow. But with that being said, guys, thank you guys so much for watching, and I will see you guys.
We'll do it live. Okay. We'll do it live. F it. Do it live. I'll write it, and we'll do it live. Thing sucks. Yeah.